feel like I can't complain.
Oh, they're recording us talking?
Well, as of now, they are.
Okay, I think we're gonna get started. Let's see if we can gather up everybody. Would be wonderful. We're close.
Okay. Wasn't that good?
All right. Good morning. Thank you for joining us for this August 4th Chicago Teachers Pension Fund Investment Committee First Friday meeting. For the record, I am Phil Weiss, Investment Committee Chair. The Investment Committee is a committee of the whole and includes all CTPF trustees. A quorum for this committee is 7 trustees. The committee is meeting today for our First Friday educational presentations. Please note the following. Access instructions for remote attendance and instructions for in-person attendance have been posted on the fund's website. All participants, please wait to be recognized by the chair before speaking, and please limit discussion for each trustee to 3 minutes. Please note that for our staff and trustees to focus on the business of the meeting, we will not be responding to messages from participants using the Zoom chat feature. And please forward your questions to member services at ctpf.org. So we'll start off with the public participation. We'll now have, do we have any members of the public who wish to be heard? Please raise your hand or send a note in the chat, and please limit your statements to 3 minutes each. Thank you. Jeff, can you monitor that would be great. I think we have one. Okay. Do we have one that?
Yeah.
How do we access?
Ms. Padilla, you can unmute yourself and begin speaking.
Hello.
Morning, Tina.
Good morning, everybody. Good morning, Board of Trustees, Executive Director, and everyone that's there this morning. My name is Tina Padilla. I'm a founding member of the Pension Advocacy Group, PAG. I'm here with a heart of teacher. I forgot my little heart that I made, but a heart of a teacher, so that I can share the mission of the Pension Advocacy Group in hopes that we will be a great resource and an ally. The Pension Advocacy Group is a grassroots group of concerned members of the Chicago Teacher Pension Fund, CTPF, who decided to be active pension contributors or members of the retirement system. Our mission, the mission of the Pension Advocacy Group, is to use the power of the CTPF members, research, organizing, education, and discussion to restore and protect the gold standard of retirement savings for our members, pensioners, and beneficiaries. Thank you for this opportunity to introduce our group and the mission and our intentions of being active participants to our savings plan, retirement savings plan. Thank you very much for the time.
Thank you, Tina. Thank you. Okay. Do we have any other public participants? That's it. Okay. Thank you. We have, let's see, in person, 1, 2, 3, 4, 5, 6 or 6. She is here. We have 7 in person.
Mm-hmm.
Yes.
She have to be physically sitting.
She's in the library.
I know we have one remote. Do you want to just identify yourself, Victor?
Yes, due to injury, I'm doing this remotely this morning. Trustee Ochoa here.
Thank you. Thanks for joining us. Sorry about your injury. right, so we have one remote and we have 7 in person.
I can't get it.
And she, we'll wait one moment as she joins here. So it'll be an official meeting.
I guess this far.
Trustee Weiss, I do think you will need to take a roll call.
That is coming next. I'm just waiting
Okay.
for one
Okay.
person.
Okay, thanks.
I never used to have trouble. Now I have trouble all the time. Here and at our chair. Now I don't know how to do this. Yeah, you know, they're so smart, you can't see them.
Six. For people listening in, we're just waiting for a couple of trustees to get settled, so we can make it an official quorum. Thank you. Yes, thank you. We have a quorum. The majority of quorum is on site, so I guess we will move to a roll call. Or actually, no, I'm sorry. We'll move to approve the remote trustee attendance and a roll call first. Okay. Can we please call roll? Thank you.
Trustee Blackwell,
Present.
trustee Nelson. Trustee Ochoa,
Present.
trustee Price Ward,
Present.
trustee Riley,
Present.
trustee Rodriguez,
Present.
trustee Travalos, trustee Vincent, trustee Washington, and trustee Weiss.
Present. Thank you.
Thank you.
The total is 7. Good. Okay, we have one trustee participating remotely. The Open Meetings Act allows for remote participation by a trustee if a quorum is physically present and the member cannot physically attend due to personal illness or disability, employment, public body business, or family or other emergency. So we have one trustee, trustee Ochoa. Can you identify yourself, Victor?
Yes, I'm unable to be there, so I'm attending remotely.
Thank you. Thank you. Do I have a motion to allow our trustees attending remotely to fully participate in the meeting?
So moved. Second.
Okay, roll call. Do I need a roll call?
Okay. Trustee Blackwell,
Yes.
trustee Nelson,
Yes.
trustee Ochoa,
Yes.
trustee Price Ward,
Yes.
trustee Riley,
Yes.
trustee Rodriguez,
Yes.
trustee Washington,
Yes.
and trustee Weiss.
Yes, thank you.
Thank you. 8 ayes.
Great. We'll now continue to item number 4, the approval of the April 14th, 2023 Investment Committee First Friday minutes. Thank you. Thank you.
Second.
Please call roll.
Trustee Blackwell,
Yes.
trustee Nelson,
Abstain.
trustee Ochoa,
Yes.
trustee Price Ward,
Yes.
trustee Riley,
Yes.
trustee Rodriguez,
Abstain.
trustee Washington,
Yes.
and trustee Weiss.
Yes, thank you.
6 ayes, 2 abstentions.
Thank you. All right. Next, we will consider the approval of the June 2nd, 2023 Investment Committee First Friday minutes. Do I have a motion to approve these minutes?
So moved.
Second.
Thank you. Please call roll.
Trustee Blackwell,
Yes.
trustee Nelson,
Abstain.
trustee Ochoa,
Yes.
trustee Price Ward, trustee Riley,
Yes.
trustee Rodriguez,
Abstain.
trustee Washington,
Yes.
and trustee Weiss.
Yes.
6 ayes, 2 abstentions.
Okay, so the motion passes. Great. At this time, I'll turn the agenda over to Fernando Vincent, our Chief Investment Officer. So Fernando, thank you for joining us.
Thank you for having me, Trustee Weiss. Good morning, trustees. So the theme of today's First Friday is focused on private equity investing in Africa. We typically, for First Fridays, invite 4 managers in who don't have any mandates with the fund. But we thought, because we've had some requests to get an update on the 2 funds that we are invested in, so we thought we would lump them together. So we'll have 2 that we're already invested in and 2 that are we are not invested in. But the field is growing. I was at NAS a week ago, and I met more Africa focused private equity firms. So I think the demand and the growth of Africa, I think, is fueling the growth also in private equity investors. Again, I mentioned we are invested in 2 private equity funds in Africa. That's DPI and AFIG. They will come in to provide an update on their organization, the fund that we invested in, and its performance. And again, to round out the morning, we have also invited 2 other Africa-focused funds to give the traditional First Friday presentation on their fund offerings, what they're seeing and experiencing in the African private equity environment. And as a reminder, the purpose of First Friday presentations is not to consider immediate allocations, but it's really to provide primarily MWBE owned and managed firms an introduction to the fund, expose them to staff and our investment consultant who's here, and hopefully everyone walks away with a better understanding of one another. So at that, I would like to have James invite DPI, our first manager who we invested in, and they'll go through. Just to let you know, there's 2 presentations. There's a public version and confidential version. They will refer to the confidential version.
And just for informational purposes, Trustee Vincent has joined us at 9:54 a.m. Good morning, Tammy.
Good morning. Morning. Morning.
Good morning. Good morning. I'm Phil Weiss, committee chair, and we'll just let you introduce yourself and get started. You have 15 minutes, and there'll be 15 minutes of questions. Thank you. Thank you.
Excellent. Thank you so much. Just quick introductions. My name is Joanne Yu. I'm a partner at DPI. I head our capital formation department, and I'm also a member of the ADP3 investment committee.
Morning, everyone. My name is Taku Mutasa. I'm also a partner with DPI, sitting on the investment team, primarily responsible for activities in East Africa. I also sit on the investment committee for ADP3.
We would just like to start off by saying thank you to the trustees, the investment staff, and consultant for your commitment to our ADP3 fund in 2019. Last time we came before you was in 2018, and we look forward to providing an update today. The good news is we have no bad news to report. So today we plan to cover first going over the African macro and outlook. We'll provide an update on our team, our strategy, the performance of our funds. We'll provide an update on ADP3, the fund that you are in. And if there's time, we're happy to cover other topics. So with that said, if we could refer to the confidential presentation that's in front of you, we'll just go straight to page 18. And the title on that slide is DPI is a premier investment firm focused on Africa. So just to quickly start off, and I know that there's some new people in the room, DPI, we've been around since 2007. The firm was co-founded by Runa Alam, who's our CEO, and Miles Moreland, who is our non-executive chairman. Both Runa and Miles are pioneers in the African investment space. Miles has been investing for 4 decades. Runa was also at the beginning when private equity started in Africa 25 years ago, and they were doing the first set of deals back then. They had a vision in 2007 of creating the first Pan-African firm that covered the entire continent, 54 countries, which did not exist back then. And having it not only reflect the entire continent, but in a firm that's 100% owned by the employees. So fast forward to today, DPI, we manage 3.1 billion in assets under management. We're headquartered out of London. Part of the reason is because we're regulated by the UK FCA and the SEC here, so we're held to the highest standards of regulatory and compliance. We now have 50 people on our team, 13 partners, and we have emerged as the top firm in Africa. So we have seen through Runa and Miles's vision. Just really quickly to touch on what we believe is the market opportunity in Africa. It is a 3 trillion GDP market with 1.4 billion population. We've seen some recent data that says that by 2050, 1 out of 4 people globally will be African. So again, a continent that just cannot be ignored. We think that the private equity asset class is nascent, huge potential. And again, the secular trends are an emerging middle class, urbanization, young population, average age 19.5, and companies becoming more sophisticated and expanding regionally, backed by private equity. Very quickly, we have a strong track record with our ADP funds. As you can see on the page, we list our performance for ADP 1, 2, and 3. ADP 1 is a top quartile fund. It's a 400 million fund that was raised in 2008. ADP 2 is a 725 million fund that was raised in 2014. Again, you can see the performance there. And our new fund that we're deploying out of, which CTPF is in, is a 900 million oversubscribed fund. It is the largest fund that's currently being deployed for Africa. We're early in our fund life, but we're excited to talk to you about the performance. Just want to mention that with our funds, we do target 3x gross MOIC or 30% higher gross IRR. Very quickly to touch on the team, we are gender balanced, so we're happy that our team makes up 45% women. The entire investment team comes from all the different parts of Africa. Again, very long history and longstanding relationships and experience in Africa. Complementary skill sets between finance and operations. And we are able to transact in the various languages, the main languages being English, French, and North Africa, Arabic. Over to you, Taku, to discuss our strategy.
Thanks, Joanne. So look, our strategy is very simple. It's to invest in established companies that are operating in sectors which benefit from a number of the trends we've seen playing out in the emerging middle class. And we've successfully built a portfolio sort of following that strategy. And it's been the consistent strategy.
Can you tell us what pages you're on?
So page 18.
Thank you.
We're still covering page 18.
Okay.
And we've been successful in maintaining that strategy consistently through our first fund, second fund, and our third fund. We seek as a firm to play an active value add role. This is led primarily by our portfolio management and investment teams, and they seek to support our portfolio companies across multiple operational and strategic initiatives. From an impact and ESG perspective, we're recognized as an ESG and impact investor, but we do this without jeopardizing our commercial returns. So we remain focused on delivering a commercial return to our investor. We're also a signatory to the UN Principles for Responsible Investment, and to the IFC operating principles for impact management. I'll move and talk to sort of market opportunities. So if we go to, this is page 20 in the confidential deck. It's the page headed, Africa is the next frontier of global growth, outpacing global GDP growth and the world's largest free trade zone. So there are a number of trends playing out, and I'll talk to each one of them very briefly. The first is Africa's home to the world's fastest growing population. 1 in 4 humans will be African by 2050. The second trend playing out is there are young aspiring demographics at play in Africa. And to illustrate this, by 2035, Africa will have the largest working age population in the world. The third trend is an accelerating urbanization that's playing out across the continent. And the forecast suggests that by the end of the century, 13 of the largest 20 cities in the world will be African. The fourth trend, growing consumption levels. And what the researchers sort of suggested is that the middle class is forecast to grow 3 times to reach 1.1 billion people by 2060. And this will continue supporting consumption levels across the continent. And then the fifth and last sort of trend that we've seen playing out is the increasing digital and mobile access across the continent. So we've seen data center capacity has doubled in the last 5 years, and it's expected to increase 5-fold by 2030. And 84% of the African population is expected to have access to a SIM card, a mobile SIM card by 2025. If we go on to the next page, this just talks to the African private investment opportunity, which we think remains compelling. So just a few stats for you. Africa holds 17% of the world's population, yet only 0.6% of the world's private market capitalization. So extremely underpenetrated from that perspective. And there's also a material financing gap of $1.3 trillion for Africa in order for it to meet its 2030 development goals. So we think there's a compelling need for capital for the African continent. If we flip 2 pages forward to page 23, some of our portfolio companies are actually at the heart of this transformation that's taking place in Africa, especially from a digitalization perspective. And we've illustrated 3 companies here. The first one is M&T Hallan, which is an Egyptian-based microfinance business that started as a traditional bricks and mortar microfinance business. And this business is using digitalization to create a fintech ecosystem, as well as a super app that will serve the unbanked within Egypt. And they have ambitions to grow across the continent as well. It is one of our sort of fantastic sort of stories in our third fund, because it actually achieved unicorn status in Q1 of 2023, being one of the only new unicorns to come into the world in Q1 2023. The second business is Ukesh, which is a fintech enabler that's delivering banking as a service and embedded finance solutions. And Ukesh enables customers to provide digital-first payment and banking services. So it offers this as a service to financial services businesses within the continent and allows them to digitalize a lot quicker than trying to do it all in-house. The last business on this page is Optasia, which is which provides airtime advances and cash loans, but these are all done primarily through digital sort of channels. And it's a leading data analytics business that's enabling credit extension to its customers. If we move to team, I'll hand back to you, Joanne, maybe to cover our team a little.
Sure, thank you. Let's just go straight to page 26, which says DPI has a strong partnership bench with 13 partners. And what you see here is the partnership group. And again, since we were in front of you, there have been 8 partner promotions. And the average tenure of the partners is close to 10 years. So this is a group of people who have been working together for a long period of time. We're very excited because the next generation of leadership is also in place. I did point out to you that Miles and Runa started the firm Runa chairs our investment committee. She is the CEO, but we also have Eduardo, who is our South African partner, Sofiane, he's Algerian by background, Rose, our CFO, who's South African by background, our colleague Babacar, who's from Senegal, there's Taku, who's from Zimbabwe, Mark, who leads our portfolio management area, who's worked in Africa, he's British by background, Jad, our Moroccan colleague, myself, I'm American, Falarin, our Nigerian partner, James, South African, Ziad, Egyptian. So we're very diverse. The team represents more than 23 nationalities. And we've been together for a long time, and it's built collegiality. And we do have one of the lowest turnovers, I think, in Africa when you compare us to other firms. If we just turn to the next page, 27, we are working on recruiting. So we recognize that we need more headcount. So we are recruiting in our investment and portfolio management area. One of our innovations that we implemented a few years ago is requiring gender. So we need to see short lists. We demand to see gender balance when we're using recruiters. We also make sure that the interview panel is gender balanced as well, so the people interviewing the candidates. And we've also implemented a mentoring program with all the professionals across the firm. We've hired more full-time people in our impact and ESG area, and our colleagues in that area are integrated on deal teams, and we pride ourselves with the impact and ESG work that we're doing. If we just turn to page 28, what I want to point out here is, again, over the last couple of years, we think that we've become more institutional. We've hired our first COO, Shailen Modi, who really looks after our infrastructure and our operations area. We just brought on in the last few months, Sarah Aslam, our first in-house lawyer as well, who is heading our funds area. And then a couple of years ago, we hired Henry Brown, who is heading our fund finance area. So in addition to our investment team, we've really ramped up our platform and our back office area. If we go to page 30, DPI has a strong and global investor base. Just want to point out that we have raised capital from all over the world. I would say that in the US, it makes up about a third of our investor base. So folks like yourselves, but we've got other pension funds like City of Philadelphia and others in our investor base. And our investors do tell us that we are the highest performing fund in our region. And you see the different types of investors that we have in addition to pension funds. We've got development institutions, fund of funds, we've got financial institutions, insurance companies, and many others. And our last fundraise, ADP3, which was closed during COVID 2021, we did hold the 900 million close. We've deployed an additional 400 million in co-investment alongside that fund. Now over back to you, Taku.
Sure, thanks. If we go to page 37, we'll just quickly touch on the investment strategy and just conscious of time. But look, our investment objective is to build a diversified Pan-African portfolio of private equity investments in established and growing companies with an emphasis on those benefiting from the growing middle class. That typically distills into six industry sort of classifications. So it's formalized retail, FMCG, healthcare, education, financial services, and TMT, technology, media, and telco. We do also look at sectors which have a derivative play on the African consumer. So we look at sectors such as packaging, logistics, etc. So what are we targeting? We're first targeting Pan-Africa. So we're looking at African businesses. That's all we do. The emerging middle class, so industries that operate in sectors that benefit from the trends in the emerging middle class. We're looking for established businesses. So these are large, profitable, or cash flow positive businesses in the continent. We're looking for unique opportunities. So we try to drive to ensure we get proprietary and strategic opportunities that give sort of significant upside to our investors. And we always focus on ensuring that there's exit potential in all the opportunities that we look at. As much as knowing what we like to do, it's important for us to know what we don't do. So we do have very clear things as to what do we not do, and that's we don't invest into turnarounds. We don't invest into startups. Or make passive investments. We seek an active role for DPI. And then we also tend to shy away from heavily government-linked businesses within the continent. Flipping to page 38, what is our strategy translated into? It's translated into investment in growth industries, so fast-growing industries. It's translated into investment into excellent companies. These businesses tend to be leaders or close to leaders within their various markets. And I think testament to the quality of our businesses is we've made probably over 30 investments in our time, and we've not lost a single company to date. We also have built a portfolio that's underpinned by reasonable entry valuations. Just to illustrate this point, if you look at our non-financial services companies, the weighted average EV to EBITDA multiple in Fund 1 was 4.4 times. Fund 2, we were at 7.8 times. And Fund 3 were at 9.5 times. These have all at each point benchmarked quite competitively relative to where the market was at the time. Our deal characteristics, minimum check is $40 million with a maximum of 120, but we do offer co-investment, and we've been very successful in offering co-investment to all our LPs. And we're agnostic as to whether we take a control or a significant minority position. If we move to page 39, this just very briefly illustrates sort of our three funds and the performance, which you'll see on sort of the page. ADP 1 was a 2008 vintage, ADP 2 is a 2013 vintage, and ADP 3 is a 2019 vintage fund. And just to sort of wrap up, if we go to page 43, I'll quickly provide an update on our third fund. So look, we're focused on deploying capital. We're still within the investment period. So our focus is really getting this fund fully invested. As of Q1, we were 67% invested or committed on the fund. And the performance, you'll see in the bottom left corner, we've shown our gross and net sort of IRRs. There is the gap in gross and net is still sort of relatively large as we're still sitting in the investment period. So we're still coming out of the J curve. So we expect that gap to tighten as our portfolio sort of continues to mature. Through our portfolio, and this statistic on number of countries reached includes both Fund 1 and Fund 2, we're reaching 43 countries in Africa. And our third fund has made a total of 9 investments to date, obviously investing sort of your capital. And we're currently sitting on a pipeline of 3 opportunities, one in the pharmaceutical sort of sector. We're looking at one in the telecoms infrastructure sector in West Africa. And we're also looking at something in the fintech sector in West Africa within our pipeline. We're hoping to get to sort of 100% deployed and invested into deals by the time we get to the end of our investment period in the middle of next year. And we have already had 2 partial exits. Despite still being in our investment period, we've managed to partially exit 2 of our portfolio companies in Fund 3. I'll skip page 44 and just highlight to you that page 45 provides an overview of our portfolio and how it's performing. I won't go through the detail, but just to illustrate that it is there. Joanne, I'll hand back to you if you want to say anything in closing.
So just want to reference page 3 and 4. And so again, for ADP 3, we are approaching 2/3 deployed and have good visibility of investing the rest of the fund. We, as Taku mentioned, we've had some early distributions from partial realizations. We're very actively looking to exit a couple of the earlier holdings in hopes that we can recycle that capital into back into new investments to help narrow the gross to net spread and make sure that your capital is fully invested or as close to fully invested as possible. And then we expect by next year, we will be back in the market with our Fund 4. And we hope to have your continued support for that. Just in closing, want to again thank CTPF for the commitment and for believing in us and trusting us with the fiduciary responsibility of managing capital on behalf of the pensioners. We brought with us copies of our impact report, and we also, for those virtually, our impact report, which we just published, is on our website and available to the public. We wanted to demonstrate some of the positive work that we're doing in addition to delivering returns. And again, I think at this point, we would like to wrap up our formal remarks and open it to questions.
Very good. Thank you so much. I appreciate your presentation. As Joanne and Taku. Thank you very much. Let me see if the trustees have any questions. Yes.
Yes.
Please. No.
I'm going to ask a question of you, since you are one of the two who's already. Oh, I'm sorry. Thank you so much. I'm going to start over. I'm going to ask a question of your firm that I would only ask because you're already invested with us. And I see that on page 20, well, let's see, I'm going back to the page 26, where you indicated that one of your partners had left. And Mark Stoneham, at any rate, the fund is always interested in senior persons who leave the fund. Because we have to, make sure that what has been happening in the past will continue. So I asked at this time is there anyone else on this page who has left?
No, so Mark is with us. Sorry if there was some miscommunication.
Okay, because yeah.
So Mark is with us. He is the partner overseeing our portfolio management area.
But you did mention someone who had left.
Yeah, so there's our colleague, JP Syed, was co-head. No, he's not. He was co-heading our portfolio management area with Mark. And JP did decide to take on another opportunity at a different Middle East investment firm, a startup investment firm earlier this year. So he did leave us. And what we decided to do for our portfolio management area is to have everything consolidated under Mark, and that he would have four people supporting him in a mid-level junior capacity. And so in terms of right-sizing DPI going forward, we really have a need to add mid-level resources because we're seeing trends like digital transformation, where we require very specialized skill sets. So this has actually allowed us an opening to bring on specialized talent.
Which is very good. But so how long has JP been with the firm?
JP, so I think he'd been with the firm, he must have joined, I think it was probably 6 years or 5 years.
Okay, so they've been working together for a long time.
Yeah, they've been working together for a very long time. In fact, one of the things Joanne mentioned is our team has been very stable and there's been very little churn through the team. So JP had spent a very long time with the firm, and I think he just wanted a different challenge.
As we say, I will ask the same of the other firm that's with us.
Absolutely.
Yeah. Good morning.
Good morning.
So, as you were speaking, two questions popped in my head, and I wrote them down because just as soon as they come in, they'll leave. So one of them was, You all were talking about the companies that you don't invest in. You said companies that are connected to like government. Did I understand that correctly? Okay, so are there any companies, as I think about like investments, you know, and we're all talking about clean and renewable energy. Are there any companies, I don't know if that's a focus or in some of the companies that you all are working in, but it's actually a two-part question because the other thing that I was thinking about was the infrastructure. You all mentioned like investing in the infrastructure. And so I was wondering, does that include investing in like infrastructure for energy, you know, as we think about middle class and electric consumption and stuff like that? Is your you know, are you all looking at companies that are investing in those types of things so that, you know, as people are consuming energy, because as the population grows, energy needs are going to grow. And, you know, excuse me, as it's coming or being developed, I'm hopeful that it's being developed in a manner that is earth-friendly.
Yeah.
We all need to be able to breathe. Look, because by 2050, I'll be about 80. And so
Yeah.
I would like to be able to breathe if I'm still here.
So there's a few points to sort of cover. I guess the first thing is just around the heavily government linked. So I think we tend to shy away. It's not to say we won't do business, but we shy away from businesses that are heavily government linked. So if we're looking at a sector that's heavily reliant on, you know, government tenders, et cetera, it's not our skill set. We sort of shy away from that, at least in the African continent. Infrastructure, we will look at tangentially, but it's not a key focus area because the return profile tends to be slightly different. So the telco infrastructure I was talking about, being very specific, is the tower space. So telco towers sharing. So business
towers, you said?
Yeah.
Like cell phone towers?
Cell phone towers,
Gotcha.
exactly. So it's investing in businesses that are managing and operating these cell phone towers. That's the business we're looking at. It's a slightly different return profile to your typical investing in a sort of a renewable energy power plant, which has a different return profile to what we're typically looking at. But to your point on, you know, when you get to 80 and what are we doing to sort of say, look after the world? And in fact, it's something you'll see in our impact booklet that I think we've left behind. We as a firm have picked 3 themes. So we follow our strategy, but in following that, we're picking 3 themes that we're looking to drive impact through our portfolio companies. The first is gender equality, which Joanne talked a little bit about. The second is, gender equality. The second is job quality and job growth. And the third is climate change. So with all our investments, we actually set up intentionality. We assess the businesses from those 3 verticals and say, look, how can we, and I'll focus on climate change, how can we improve the practices of this business or have an impact from a climate change perspective through this business? And that varies depending on the company. So in some cases, we've driven wholesale changes to simple things like saying, look, let's start using LED-based lights because those are a lot more energy efficient. In our businesses, we've also looked at potentially, in fact, this transaction didn't go through, but it was a retail business we looked at in East Africa. And we were considering putting in place solar power solutions on top of all their shops so that they could end up being sort of a green sort of operator from that perspective. So through our portfolio, we're looking to drive impact from a climate change perspective. So we're not quite investing in renewable power plants, but we're focused on climate change from an impact perspective.
Okay, thank you.
Thank you, sir.
I'm going to sneak in a question. Is it, you want to go, Jackie?
Thank you very much. Well, good morning,
Good morning.
Joanne. We had a great time at a conference. Good morning. I had a question about, if you could give us a summary of, I know government has a great big impact on who you're investing with. Can you give us a brief summary of the state of government in your countries that you are investing in and why you shy away from those particular investment opportunities in those particular countries?
Sure, thank you. I'll start and then please do jump in, Joanne. So, you know, what I guess, why do we shy away from the heavily government-linked businesses? I think in some cases, and it's not, I don't want to paint sort of a brush, but especially around tender processes, sometimes in some markets, those can be quite opaque. And I think as a firm, we've chosen to not want to participate in business that may not be sort of transparent in the way sort of tenders are sort of provided. So we've, I think it's more a style thing where we said, look, in order to manage our risk from that perspective, we'd rather just shy away, because we think there's a significant investment opportunity in the continent without having to interact directly with sort of any governments in any way, and have to form a view as to which governments are good, which governments are difficult to sort of deal with. The other question you sort of raised was, what markets are we looking at? And in fact, one of the key strengths we have is within our team, we've got people coming from all the various corners of the continent, and we've split ourselves from an investment team perspective into a geographic coverage. So we've got gray lines from a geographic perspective. So we have someone from Egypt who covers Anglophone North Africa, which is primarily Egypt, which is where we spend a lot of our time. We have colleagues from Morocco, Algeria, and Tunisia, and they cover Francophone North Africa. And those are three markets we've built sort of a good presence in from a portfolio perspective. We have colleagues from Senegal who ultimately cover Francophone West Africa, and we've built a very good sort of business within that sort of region. We have a colleague who comes from Nigeria, and he covers Anglophone East Africa. So Nigeria and Ghana become sort of important markets for us. We have colleagues from South Africa, and I'm from Zimbabwe, so we've got good coverage in Southern Africa, and we've built a portfolio there. And we have colleagues, whilst I am responsible for East Africa, I do have colleagues who are from Somalia and Ethiopia who help me cover the East African sort of market, and we feel we've got good coverage. So I think I wouldn't say we've picked one or two markets. We look across the entire continent, but naturally, given the size of some of the investments we make, we do end up investing in certain of those markets.
Okay.
And just really quickly, we are investing a US dollar fund, and we're promising US dollar returns. And so we, as you can see by our presentation, we don't even report in local currency because we're promising dollar returns. So it really feeds into our thesis. We have to be able to be investing in countries where we can get our money out. And that's generally possible in most of the larger economies. We've also never lost a company in 15 years. We've made more than 30 investments. So we have one of the lowest loss ratios. We've never had to liquidate an investment. So all of that to say, there's a lot of nuance that goes into what we do or don't invest in. But we feel like as long as we're following this thesis of looking at companies that are meeting this huge unmet demand of the African consumer who needs essential goods and services, regardless of whether or not there's a pandemic, a recession, macro challenges, people still need food. They still need access to healthcare, financial services, education. And that's why, despite whether the market is up or down, we've been able to make investments, sell companies, and return capital to our investors.
Thank you.
Very good. I'm going to sneak in the last question here. So you mentioned co-investments. Do you also do buyouts and secondaries, and how long do we tie up the capital for? Just curious.
The co-investment is a service that we provide alongside the fund for certain pension funds and other institutions who can do direct investing alongside the fund. And so that's something that we offer. But in terms of the structure of our investments, Taku, do you want to?
Yeah, so look, I mean, I think what I'd say is typically, I guess the fund would be a 10-year sort of fund life. And with our co-investments, we try to, at the point the fund is sort of entering into transactions, we'll put out a notice to our LPs to say, look, there's a need for co-investment on this particular deal. And it tends to be where the fund has reached its cap in terms of the upper limit as to what the fund can invest in the transaction. And our co-investors will typically come and sit alongside us in the sort of vehicle that is investing into that portfolio company. And they tend to sort of enter and exit at the same time as the fund. So we try to ensure there's alignment between the co-investors and our main fund.
But just, I would think of us as a growth equity investor more so than a buyout investor, because debt doesn't typically exist in the same way as it does in the US. So we're not leveraging up as much. All of our returns are generally based on the growth of these companies rather than debt.
And actually, just to illustrate that, what you'll find is most of our portfolio companies, we're sitting in partnership with an entrepreneur or a family that have originally set that business up sort of many years ago, and we sit alongside them and we work very well with them, sort of in driving growth for the businesses. So we're not agnostic. We're not, we can do buyouts and we have done them, but I think we tend to do very well sitting alongside local entrepreneurs who know their market really well and know their business very well.
Great. And are these early stage or are they growth? Because I know it says supporting early stage, and I see the VC professionals on staff.
Yeah.
I'm just curious.
So this is primarily, so the ADP3 fund is a private equity fund, and so our businesses are established. So one of the criteria we tend to look at is that the business is profitable and or cash flow positive. So the investments that our ADP3 fund looks at are very much focused on sort of established businesses that are growing. Separately, as a business, we are looking at sort of an earlier stage opportunity, just because we having a structure that allows us to look at earlier stage opportunities. But our ADP3 fund is purely focused on sort of private equity and established businesses.
Thank you. Thank you for clarifying.
Sure.
Appreciate it. Any final, I think we're good. Thank you very much. We appreciate the presentation. I'm glad we have you on board, and you will be in our slide deck, and we will keep an eye on you. So thank you so much. I appreciate your time today.
Thank you.
So much.
Thank you.
Fernando, did you have any final thoughts, or do you want to introduce the next?
Summarize it.
Oh, perfect. Thank you. Perfect.
Good morning, AFIG. Welcome to Chicago Teachers Investment Committee First Friday meeting. With us today, from left to right, we have Trustee Weiss, Trustee Vincent, Trustee Nelson, Trustee Washington, Executive Director Lenore, Trustee Blackwell, Trustee Price Ward, Trustee Riley, Trustee Ochoa joining remotely, as well as Trustee Rodriguez, our Chief Investment Officer, Fernando Vincents, our consultant from Callan, Brianne Weymouth, along with investment staff. You'll have 15 minutes to present, followed by 5 minutes for questions, and you may begin your presentation now.
Thank you. It's an honor for us to be here, and thank you for making the time. My name is Papa Njai, and I'm the CEO of AFIC Funds. And I'm here today with my colleagues, Patrice Backer to my right, who's our Chief Investment Officer, and Kate Lamb, who's our Head of Investor Relations. We've been looking forward to coming back to Chicago to provide you an update on your commitment to us with the AFIC Co-Invest SMA. I think the way we structured that product and the relationship we've built with you is first and foremost testament to CTPF for its long-term leadership in the pensions area, and to organize a worldwide search for managers. We feel very fortunate to have been selected to be here. We really believe that Africa offers many unique opportunities, especially in the private equity area, because the financial system is still nascent and growing. So private equity really fills in a void in terms of providing capital to entrepreneurs around the continent. But I have to say, Africa is not for everyone. And I'd hope that our presentation will illustrate this point. It's for those who know what they're doing and who can pull out the best opportunities. Everybody can come here and give you a nice set of glossies and tell you about the continent is moving forward. But when it comes to giving the results, it requires many years of practice, of getting your teeth kicked in, learning. And once you do that, you're in a position to really take advantage of what I believe today is an important turnaround in the African economies. Because it's the first time that in recent African history that the continent will have to get out of a difficult global environment on its own, because everybody's very busy with themselves, as we know. Between the COVID crisis and then the war in Ukraine, no one has time to be worrying about African countries, so we have to do it on our own. And today, for me, it's really, as I said, a pleasure and honor to come and talk to you about what we have been able to do to today have one of the top portfolios in the entire continent, despite a very difficult last couple of years globally. And we'll illustrate that with a couple of examples that Patrice will walk you through. Second is also to really tell you a little bit more about ourselves, because it's our first time really to come back to Chicago. So in teaming up with us, you have a partner who has developed an investment thesis that is specially tailored to our region. We're very proud to be the first minority-owned and managed investment fund in Africa, started in 2006. And we moved to Africa at a time when everybody was dialing it in from various locations in more developed environments. And since then, it's become a generic thing. We only invest in African entrepreneurs who have been battle tested. We don't do multinational corporations. Most people will think that that's too risky, but we feel multinationals are too expensively priced and also have very little upside to them. They will be nice and steady most of the time. Whereas if you pick the right local partners, the growth is very attractive, as we will discuss. We select performing companies that have significant potential for operating performance and as a hedge against adverse market conditions. You look at a country like Ghana, where in 1 year, the currency did collapse by 30%. We invested in a bank over there that on a compounded annual growth rate has grown 35%, 32% in the last year, and also has been doing very well on the profitability side. Now, it's not to say that things will remain that way in Ghana. We expect that over the next couple of years, we're really at the trough of the cycle, and that things will pick up as we seek to exit. Our approach has been to also come in at a very low entry price, as I said. None of our investments have exceeded 8 times EBITDA. And in fact, we're generally between 4 and 6 times EBITDA. Most of the market is between 6 and 12. So we're very proud of that. And we structure our investments to provide cash on cash at every opportunity so that you and the teachers you represent can feel that there's something coming already, rather than just wait for the exit to provide a magical upside. At the time of entry, we start working immediately on exits. We just concluded, and that was one of your last investments, that we've made. The first leverage buyout transaction in Francophone Western Central Africa, 14 countries where an LBO has never really taken place. It's taken us a couple of years to structure it, to make it happen. And we have very high hopes on the returns that will give to yourselves. But even though we just concluded the LBO, we were just in Turkey talking to a number of potential buyers of our stake in a few years and starting to develop relationships with them. We're also discussing already with other private equity funds. And in fact, we just saw in the hallway our good friend, Richard Okello from Sango Capital, and we're already discussing with them the possibility of actually them investing and taking us out in this. It'll take a couple of years, but we start very early. And to us, those are the things that I listed, the key things you need to do to be successful in an African environment that's very confusing to many people, because 1 minute you're told everything is great, and the next minute people tell you their results and you're rolling your eyes as to what happened here. It's because it requires a bespoke approach. I will now turn it to Patrice to walk you through some aspects of our portfolio. And I'd be very keen to engage with you on a Q&A. There's a whole lot more I'd like to say, because I'm very excited to be here today. And we take the charge of investing your money very seriously. The same way we take the investments we invest in very seriously. We feel the companies we invest in provide jobs and impact, and we meet every day with the staff, and each one of them, to them, the job is a source of dignity. And I feel for you as well, our performance is not just dignity, it's also security. So I always feel that this job we have is a blessing, but it's also a source of stress. So very happy to be here, and I'll pass on the microphone to Patrice.
Thank you, Papa, and thank you for having us today. I want to, thank you, Papa, and thank you for having us today. I want to first start with a general overview of your fund. On slide 14 of the confidential presentation, we summarize the $10 million commitment and the disbursement. As you can see, we've disbursed, certainly for the investment side, the vast majority of the funds allocated to us. And in this case, we have leveraged the investments in our main fund to provide CTPF with exposure to the best companies in the portfolio. And also, just want to stress that given what we've done with our main fund, we were able to offer to CTPF a fund with a beneficial fee structure. The fund has a 1.2% management fee and 10% carried interest, rather than the typical 2 and 20 in our region. So that is for CTPF a benefit. We are sensitive to the fact that as a pension fund, you have to monitor your fees very closely, and we want to maintain a lean structure with that. Our portfolio has shown significant resilience during COVID-19 and also the current economic turmoil, which we all know. To put it in context, the two leading companies in our portfolio, First Atlantic Bank and Nouvelle Mission Embassy, which I'll refer to as NME, have had stellar performances in local currency during the turmoil and have remained profitable. First Atlantic Bank is a universal bank operating in Ghana. Since our investment, it has shot up from being a number 26 to number 5 in the Ghanaian financial services market in terms of profitability. And its revenues, as Papa mentioned, grew about 30% a year, and its profitability has grown 120% over the past 3 years in Ghanaian cedis. Nouvelle Mission Embassy, NME, as I mentioned, is the leading and largest packaging company in French-speaking Africa and is a market leader in packaging. It could have been affected by the crisis as well because it's dependent on the consumer goods and food and beverage industries. However, its revenues grew at a 12% clip annual over the past 3 years, and its EBITDA also almost matched the growth at 10%, despite margin erosion due to cost of shipping and transportation. These performances are not a fluke. They're a result of our upstream process of identifying strong companies with the capacity to adapt their strategy. These unique times also forced us to make difficult decisions, but we have a fiduciary responsibility. We made 2 capital calls for investments in Sopoykam and Lakaway, which you've received. In the case of Sopoykam, we decided to delay the investment, which we're going to make in a couple of years, because we wanted to make sure that the company's restructuring went well. And the benefit to the CTPF fund is that the entry price will be actually an advantageous price. In the case of Project Lakaway, we called the funds, we were about to close, and then we were concerned about a couple of governance issues that we strongly tried to resolve. But when we could not, we decided to take the unprecedented step of halting the transaction and returning the funds to CTPF. To us, there's nothing more important than our reputation and your reputation, and we didn't want to take the risk. So these are some of the things that do happen in our markets. They're not usual, but you have to have conviction when you invest, and you have to be clear-eyed and not be caught in the momentum when you decide to pull out. The strong operating performance over the past 12 months has not been matched by our book valuation, and that's due to 2 factors. If you look at slide 19, you'll see that for example, the Ghanaian CD, which is the currency of Ghana, has had a significant depreciation, and that does affect any investment in dollar terms. And also, valuations are based on multiples of market, and the multiples have also collapsed. And so those are, when it comes to valuation, we follow a specific procedure, and we also add a 20% liquidity discount. So that accounts for where the valuation is today. However, in reality, First Atlantic Bank is a prized bank, and it's been a target of several entities that have made offers to us, which we've not accepted. And all of the offers have been at a price to book multiple of between 1.4 and 1.9, which is about 3 times the current price to book implied in the valuation. So we're extremely comfortable about the actual performance and the valuation that we will extract when we exit the bank. And the same is true for NME, which, as the result of our LBO which was closed at the end of June, the value of your stake in that company has actually tripled without any additional capital. And so that to us is very good news. So when we look ahead, we believe we've reached the bottom of the macro cycle. We can point to a few indicators in that respect. First of all, in Ghana, the government has reached an agreement with the IMF on an economic package. And that to us is very good news because it means stabilization of the currency. Inflation is slowing down in Francophone Africa, just as it is here in the US, and that's another good news. And finally, our region is a net importer of finished goods and products. And so we're dependent on transportation prices, particularly from China. And lately, these costs have come significantly down, reducing the impact on prices and on inflation. So from a portfolio perspective, we expect our investee companies to continue to perform strongly, and that is the best hedge we can have against any type of macroeconomic shock. We plan to hold the investments until 2025, 2026, at which time we believe we'll have ideal conditions to exit the fund. And we are looking at a multiple of money of 3x at exit overall, and we, on our base currency, based on, which is the dollar, based on our expectations for currencies and also continued strong operations from the companies. I think beyond the portfolio, we are concerned as a corporate citizen, as Papa mentioned, about the communities in which we operate. So I'll turn it over to Kate to tell you a little bit about the impact beyond just the financial numbers.
So we've been, since early days, been very deliberate with regards to our approach to impact. We understand that ultimately profitability and sustained growth leads to job creation and increase in disposable income. And obviously that's very important to everybody across the board, which is perhaps the biggest impact we can have in our regions. So today, to give you an example, to date, our operating companies employ more than 3,400 people. Now, putting it in context of Africa, one job actually affects, I would say, about 5 people, directly or indirectly, you know, whether relatives or friends. So in essence, you're looking at our impact of, you know, from all portfolio companies of 15,000 people. That's to say that we're very proud of this, and the job's not finished. I think the World Bank published a report saying that Africa is going to have the biggest youth population in the coming decades. So we're very happy to already be entrenched and contribute to this particular piece of job growth. We're also very cognizant of workplace diversity and inclusion. You know, we keep an eye, we track closely the representatives within the operating companies as well as the board level. I think lastly, you know, I can go on and on about impact. That's, you know, near and close to my heart. But in the interest of time, what I do want to emphasize is that as part of our risk management, we have adopted the IFC's framework on environmental and social responsibility, sustainability. And as you know, some of you may know, the policy describes their commitment, roles, responsibilities related to the environment as well as social sustainability. So while we aggressively pursue returns for your portfolio, we also keep a very compliant eye out on the impact framework.
Thank you. I think that concludes our presentation. In summary, the couple of takeaways: we've deployed all of your capital in a record amount of time in some of the best companies that we've been able to identify around Africa. We are very much looking forward in the next year or two to start giving you this money back in multiples of what we have invested. And we really hope that we will have more opportunities to come to talk not just about our performance, but to tell you more about what's going on in the continent. There's a lot of discrepancy between the reality and what is being published out there, a lot of sensationalism. So I hope that we get an opportunity to continue to be in touch. I know your time is precious, so thank you so much for allowing us to express ourselves today.
Thank you. Thank you very much. I'm Phil Weiss. I'm the committee chair. I appreciate your presentation. Let me open it up to questions here. I knew I was going to have questions. I'll start with Nelson. Sorry, thank you.
And my first question, and good morning, is regarding the question that I'm asking anyone who comes before us. If anyone has left the firm at the top level, and I see all 3 of you here, so that answers my question. Okay, so let's just move on to. I love the transparency that you brought in this morning, and I love the fact that you have offices in Dakar, Senegal, and DC, because other offices other than South Africa. Okay, and so and your 3 basic points, 1.96%. Love that. Okay. And so after, you know, going through the things that are so positive, I just have to ask in terms of this, the governance issue. And I wasn't quite clear in the explanation of what the government, you know, governance issue is. And then the fact that Ghana is the dollar, because some places we know are devaluating the dollar. And so if you were to tell me that, okay, I'm going to give you back the dollar, and that's a place that is devaluating the dollar, then we're not making as much as we should be making. So I just, just a brief clarification, because I know that you want other questions answered.
Sure.
I'll let Patrice handle the part on the dollar, because I've been pushing that to him to deal with that pain for a few years. Regarding the governance part, for us, we pride ourselves on taking the painful decisions to avoid coming here with our heads down and embarrassed.
I'm sorry. Have my mic on the whole time. I hope you heard everything I said.
I heard everything.
Okay.
Yes, and so as Patrice said, we took an unprecedented step. We are paid to deploy capital and other things as well, like give back good returns. So, and you will see as you talk to people around the market, finding good investments in Africa is not that straightforward. So when you get an opportunity to invest in something solid, you want to put the money in. So for us, it was a painful decision, but there is no way we can risk the headline risk of you guys having to go to your pensioners and telling them, this is the embarrassing situation that one of our managers has put us in. So for us, as much as it was a painful decision, it was not something that we hesitated to do. We did it at a time also that was not very particularly convenient, because there was not that much, we had a currency shortage in Nigeria. So getting our money back out was a real nightmare, but we focused on it and we gave you the money back. The governance issue is fundamental. If we can't work with people who can be trusted, we have to back off. And no matter how much temptation is there, how much greed and all of that, we have to back off, because we feel that we have to have a long-term relationship with you guys. Every investor that's invested in us has come back once, twice, 3 times in our 2 funds. And it's because we make these types of decisions when their time is necessary. Thank you.
And thank you. And I'm Trustee Nelson. Okay.
And with respect to your question about the depreciation, the Ghana CD, I think, was the most extreme. It so happens that First Atlantic Bank is located in Ghana. And so if you just look at the graph we shared with you, the CD went through a severe devaluation. But now we believe that it hit rock bottom a while back. Since it has rebounded. And I think that we're going to be on a slow path up now that Ghana has reached an agreement with the IMF. And therefore, the most important part of investing in these types of markets is to make sure that the companies you invest in are able to continue to generate revenue and profitability. And if you look at the investment, you will see that First Atlantic Bank, on a compounded annual growth over the past 3 years, has grown its revenues about 30%. And has grown its profitability by about 120% a year. And that was a good hedge against what happened. It doesn't mean that we're out of the woods, but it means that as we are looking over the next 2 years, when we're going to focus a lot more on harvesting our investments, the situation, we believe that we are at the trough of the situation, and that we are now on the ascending path. And that to us is the most important. And even if we were to stay at current levels, as long as the company performs well, we believe that the multiple, the price to book, implied price to book multiple will increase significantly enough that we will be able to provide a good return to CTPF. That to us is the most important.
And I say thank you again for the transparency.
Thank you.
Thank you. Thank you. So 2 questions. One for you, Patrick, just related to the returns since inception. I think I understood you to say that this is based on the value right now.
So let me, yes, exactly. Let me explain what I mean by that. When we first launched our company, we met with BII, British Investment International, formerly CDC, to draft our valuation guidelines. So we have a methodology that we follow. And that methodology is based primarily on what we call market multiples. So that's the accepted methodology. One of the ways we actually exit is through transactions but our auditors will not accept that methodology. So we have to go with KPMG Mauritius. They're the auditors of your fund. So, so the market multiples, we don't control them. But when we're negotiating with a bank, we have some control over, their offer. They can tell us, well, we'll pay 1.2, we'll say, no, that's not enough. So over the past 6 months, we've received offers, firm offers of between 1.4 times and 1.9 times book value, which is completely at odds with the current implied book value that you see in your reports, which is about 0.7. Right. So that means that if we were to agree right off the bat, we would double or 2.5 times the amount that of the value of the bank that you see in your books. This is why I make that distinction. But we cannot, our auditors will not accept it unless the transaction actually happens. And just to let you know, recently, a bank in Ghana sold, well, recently, a few months ago, at 1.5 times. So that's a good benchmark for us. And it tells us more or less that the offers we're receiving are okay, and they're well above where we're marking the book today. That's what I wanted to.
Thank you, Patrick.
Add just 2 quick points. One is we are being punished for having leading companies. If your company is the best of the lot and those who are listing are lower, and you're using the listed company's valuation, you're always going to be looking like something's wrong with you. So that's number one. Number two is this is a regular conversation we have with our LPs, because they're like, how come this amazingly performing company is below water?
Right.
And every time we have to go through the same thing, but yet those are the same LPs that agreed with us on that methodology, which is much, in our view, much more relevant to a developed market. The New York Stock Exchange is very liquid. It makes sense to use that as a comparable for private equity. But the Ghana Stock Exchange is not very liquid. And few banks that are performing are actually listed. Some of those banks that are listed are not in the top 5. So we unfortunately end up being punished with that. But that's why we give you these various perspectives to look at this from. But the best perspective is selling the company and giving you the cash back. So we're looking forward to that.
I also want to add one thing. Within our valuation, even when we use market multiples, on top of that, we apply a 20% liquidity discount, which is reflected here. So it's extremely conservative, but to us, it is the methodology agreed upon. It's what a lot of our LPs are comfortable with, and I think we have to go with what they want. But what we do when we report to them is we will report the valuation as agreed, and then we'll show them the valuation without the liquidity discount. Because if you think about it, why is the liquidity discount? It's because it's a private company. But once you're out there trying to sell it, you're no longer in the private company realm. You will look at the actual multiples, not the multiple minus the 20% liquidity discount. So they have a better sense at that point.
And just really, really quickly to Kate, you mentioned impact in terms of jobs to people. Can you talk about social responsible investing and any examples of that from your company?
That's one of the things that Patrice has been beating us over the head. So I'm excited to answer that question. Kate's excited, but if you don't mind, that's been one of his pet peeves.
I think we take a slightly different approach to this. Okay. In the African context, the simple fact that we make an investment in a company and that we monitor it and try to grow it is in and of itself a socially responsible investment, because there's no greater impact we can have than to get a company to be profitable, to pay its employees on time, and to put money in the pockets of our employees so that they have disposable income. I know in developed markets, it's taken for granted, but in our region, it's extremely important. And that's level number one. Level number two is that we actually, for the companies that do very well, we encourage them. And First Atlantic Bank has been, I think, a very good example of the type of socially responsible institution that, in addition to earning profits from its shareholders, also does work within the communities because it's all over Ghana. And the same is true for other institutions. And last but not least, there are other initiatives, but we are very, very focused on we take a gender lens approach to our companies. Because, we're in Africa, so you say, yeah, that's diverse enough, but are women and men given the same opportunities, right? And so, for example, I am on the board of a merchant bank in Nigeria. I was the chair of the governance and nominations committee. And I think we must have done the first women MD to woman MD transition, where one woman MD was retiring and she was replaced by another woman. And that's just, it doesn't happen too often, let me tell you. But those are the types of things we are paying attention to, both at the board level and at senior management level. And we track all these numbers for the companies, every year to see whether there's progress being made, or if not, what is going on and what can we do to make sure that there's an increased representation.
If I may add, we talk about social impact. I'm sorry if you can hear me. We talk about social impact. It's actually sustainable impact, right? If you look at some of the sectors that we play in, we hear a lot about financial inclusion. We hear a lot about the underserved. I mean, everybody knows if you're a great credit, you can go to a top bank and open an account with the blink of an eye. But if you really play in the middle market segment and really think about the communities that you serve and the sustainability of the banks themselves, the risk management framework, right? If the bank doesn't sustain and survive, the depositors are not going to get protection. And so, we hope that through, as the gentleman mentioned, with our specialty, our discipline and the best practices, global know-how, et cetera, transferring it within that whole emerging markets context, we see more of, as I said before, sustainable growth. And therefore, directly and indirectly, you talk about financial inclusion. You talk about, why are we targeting African entrepreneur instead of yet another Pfizer in Africa? Excuse my example. Not that I have anything against Pfizer, but that's just to give you some ideas. And also some of the companies that we have, like RMG, we provide training and skills developments for farmers. So really having what I call the local knowledge or the tie locally with what I call the international discipline and our ability to see things on a global level, what's going on in Europe, what's going on in the IFC. I think that's a very unique skill set that we can integrate to help, again, sustainability. But I'm not talking about the whole ESG. I'm not talking about these nice, sexy terms that are being tossed out there. I'm actually talking about sustainability. How do you make this company grow and how do you make this company survive?
And over the last couple of years, sustainability has become popular in the US. And, we've been in sustainability from day one. I mean, we're sustainable in sustainability by definition. So when we saw sustainability being redefined by BlackRock and others, we felt compelled to spend our own money, bring in some consultants to actually come up with our own SMS sustainability management system, which really brings in all of our experiences of the last 15, 20 years. And happy to share that with you, any one of you that is interested in looking at that. We're very proud of it. I think we're the first ones to do it rather than having this imposed from outside onto us without any contextualization of a reality day to day. Thank you.
Thank you.
Very good. Mayor Sharon.
Thank you.
Thanks, Bill. I think you might understand that we were alarmed at looking at your performance when this is the first time we've met with you. You've been with us 4 years and we have no history really because we couldn't meet, which is none of our faults. But I think it would be nice if we would meet more often with you and have it explained to us a little more, because the raw numbers are not the true picture. And we need to know that. Because we took a risk by investing in 2 African companies 4 years ago. And we just did it. And we thought it was the right thing to do. And yet the 2 of the companies are dramatically different in performance. So one of my suggestions is we should meet with you more often and try to understand what's going on. Because our members wouldn't like to see this, that we lost 19%. But that's just a snapshot. It's not what's really happening.
That's correct.
I think one of the first of all, we will be here within 5 minutes whenever invited, and we will also continue to push to sort of propose to come. We're in the US quite a bit, so it's always a pleasure to be here. And we always also feel we're so busy with the portfolio, we don't do as much of the selling and all of that, but I think we will make more of an effort.
Don't stop being
Exactly.
working the portfolio.
Absolutely.
I didn't mean that.
Absolutely. Now, the second thing is that one thing we will do going forward is whenever we put these, I would say, somewhat theoretical approaches to valuation, we'll put right next to it what we feel that is the actual proper value, like we did today verbally. It's just we didn't do it as much in the past because we're always concerned that people think that you're trying to be tricky. Here's what you agreed, and now you're telling me you're doing this.
In other words, you're damned if you do and damned if you don't.
Exactly, but certainly happy. That's why we're very happy to be here, and look forward to being here as often as possible. Last point I will also make is that we are passionate about the Africa investment story, and we feel it's always being told wrong, unfortunately. I've been in this business of investing in Africa probably longer than most people. And most of the people you're going to talk to or meet with, they've either worked for me or been trained by me. So being here today to talk about what Africa can do is for me beyond the actual job. So certainly being given the opportunity to come back and talk to you, not just about ourselves, but about where the continent is, what's going on with some of these countries. We're happy to give you also little snapshots whenever there's a news event and just send it to you. You do with it as you please, but information is key and would love to give you more of that.
And there's always Zoom.
Absolutely.
I'm just going to add one last thought. So I guess I'm struggling. So is the currency stable in Ghana now? Because it lost quite a bit of value.
Yes, the currency has stabilized.
Okay.
I think what you've seen is what you saw over the past year was a loss of confidence because of the default situation and the loss of confidence because of the debt stock that was a little bit too high. And Ghana had refused at that time to engage with the IMF, which they now have. And once they have the IMF package, they have the agreement in place, and a part of the agreement is a loan to stabilize the currency. I think the hard work is still there for the administration, which is to basically manage its costs. But I think it's learned its lesson that it can no longer do as it did in the past. That I think is important.
So, but the currency, even though the IMF is helping to stabilize, it has not rebounded as of now. I know you have kind of present a
well, actually,
picture.
if you look at there's already been a rebound now. Is it going to go back to 6 cedis to the dollar? No, I think that's a long ways off.
Right.
But to us, the fact that if you look at if you're on slide 19, you'll see. So it's the graph to the left. So around September we were at almost 15, and now we're back down to about 11, 12. And this is before the provisions of the IMF agreement kick in. And so, and that's the point I was mentioning earlier, when you are in a situation like that, the one thing you do want to have is a performing company, because the growth of the company will mitigate the effect of the currency. But it's only one of two elements, right? If you look at the bottom, it was a combined, a combined impact of currency and multiples. that led to the valuation in the book. It's not just currency, right? And that's why we look at that and say, okay, we understand what's going on. But then when we have one of the largest upstarts in terms of banking concerns coming to us and say, hey, here's my letter of intent. I want to buy your stake at 1.6x. Then all of these items become, in a way, irrelevant because it is already about twice the value that's reported in the books.
And one thing that we do is, since we don't control the macro elements, is that we give you diversification. So we could not have predicted what happened in Ghana, but we knew for a fact that Ghana had a different currency movement historically than Cote d'Ivoire and Cameroon that are with the CFA that's actually tied to the euro. So your investments are in those countries where you will see that the currency is a lot more stable because it's actually pegged to the euro at a fixed rate. And the euro tends to correlate a little bit more strongly with the dollar and doesn't have as big a discrepancy, a change in a difference in valuation. Thank you.
Do you happen to know if in Cameroon, do they back their currency by commodities still? Do you know? I'm just curious.
So
'Cause I know they did at one point.
Cameroon is one of 14 countries that adopted a former French colony that adopted the what's called the CFA franc. And this is a currency that, as Papa just mentioned, is pegged to the euro. So if you want to know where the CFA is, you don't even need to search for it. Just look at where the euro is. It's a fixed peg, and it's been in place since independence, since the 1960s. So they don't even need to. So of course there's a cost to it. They have to keep part of their reserves in Europe with the central bank, actually the European Central Bank now.
Thank you. To be honest, we're way over on time. We appreciate it. Please, we'll stay in touch.
Absolutely.
And thank you so much. We appreciate your time.
Thank you.
Why don't we take a 5-minute biology break? Let everyone do their personal things and we'll come back shortly. Okay.
We gave them the whole meeting today, the two. But I think it needed to be done because we haven't met with them at all. Interestingly enough, I have a classmate of mine from high school and college is a nun. She spent her whole career in Ghana educating seminarians. And she's back in this country now because at the age of 80, we're not going to be in Ghana. But
Okay, good morning.
Good morning, Richard.
Yeah. 5 minutes.
Yeah.
Oh, good. Good. You're okay.
I said, do I need to get you? My son said it's not loud. He says, so I hold out. I think he thinks strong. So, but yeah, we're always.
But it's just such a, and I've said to but she said like they went to college. But as soon as she said his name, I'm like, I just yeah, she's yeah, he's good. I mean, it's probably last year. She had this I mean, we have what did you say about the factors? So I stayed here last night because so the other thing was when I was kind of thinking, okay, I should think about how to see my first research was very much still here. Like, how's it going? She doing that good because I thought we should look safe for better and she's like, it's keeping you waiting a long time. So she's not there. Yeah, and you just got in South Carolina. It was the first time we met with those two managers since they hired in 19. And he had been extended. So that's where they are. Yes, I think I'm really good. So that's why I told you that's sort of the box. You've been down there for something. I don't know. Jonas is saying the contrary suggests that it's not going well, so I think it's going well. They really like this. Yeah, so they like it. Yeah. I know. Sometimes you just want to be happy, like kids 16. I can't feel anymore. The world's going to have Marx's die. I know. Let's just find some. And meanwhile, I was really okay, Tammy? Are you feeling better? It's scary when you get sick all the time.
usually was pretty lucky, but I was in Israel one time and I got sick there. I was like, oh, this is not good.
Okay, good morning.
We are ready to go. So I'm trying to herd the trustees here. I feel like I'm herding cats, so.
Yeah, just, if you do it, just submit.
Is it Richard? Is that your name? Richard, okay. I'm Phil Weiss. I'm the investment chair. So I'm gonna herd these cats here and get you going here. So thank you. It's Single Capital, correct?
Single Capital.
Single Capital. All right, trustees, let's.
All right. Okay, good morning and welcome to Chicago Teachers Investment Committee First Friday meeting. With us today, we have Trustee Weiss from left to right, Trustee Vincent, Trustee Nelson, Trustee Washington, Executive Director Lenore, Trustee Blackwell, Trustee Price Ward, Trustee Riley, Trustee Ochoa joining remotely, as well as Trustee Rodriguez, our Chief Investment Officer, Fernando Vincents, our consultant from Callan, Brianne Weymouth, along with investment staff. You'll have 15 minutes to present, followed by 5 minutes for questions, and you may begin your presentation now.
Thank you, members of the board, Chairman Blackwell, Chairman Investment Committee, trustees, staff. I appreciate the opportunity to share about Sango Capital and our perspective on the African opportunity. My name is Richard Okello. I founded the firm along with Charles Mwebi, my co-founder, about 11 years ago. We'll spend the next 15 or 20 minutes just walking you through the opportunity, how we see it, what we've done over the last decade, and how we think this can add value to the Chicago Teachers Pension Fund. Next slide, please. Just next, we'll skip a couple of slides. So I think this slide, sorry, this previous slide, I think this slide is a good jumping off point. You know, as we all know, our business is about people, investment management business about people. This is to give you some perspective on our team. We spent a decade building this team. I grew up in East Africa. I went to school briefly in the UK and in the US. And then I spent 15 years working in the US, and a substantial portion of that time was really spent helping build two investment firms, Bridgewater Associates and McKenna Capital. And one of the things I learned doing that is that building great teams that then go on to deliver great results is incredibly difficult. It takes time, it takes resources, it takes a lot of sacrifice. And so what we've built here is a team that we believe is diverse, not just in background and experience, but in thought. We continue to invest substantially in that team. It's
It's also a very experienced team. The senior investment members on the team average about 28 years of experience, both inside and outside Africa. But also the senior middle back office team also averages about 25 years of experience, which we think is important given the context that we are investing in. Next slide, please. One more slide, please. Okay. So just to jump into the African opportunity set and the area that we focus on, which is the African middle market growth and private equity and venture opportunity. I think there's a couple of things that are important to highlight there. And I know that you all have already invested or stepped into African private equity, but I just want to highlight a few things that we think will be defining for this geography and for investments in the geography. I think one is this idea of strong, sustained growth. If you think about what has happened to Africa over the last 20 or 30 years, the one thing most people have gotten wrong about Africa has been growth. If you look historically, in general, people have expected African growth to dip when it hasn't. If you look back to the global financial crisis, Africa and Asia were the only two places that did not have a recession. If you look at COVID, I think people felt that Africa would generally fall off a cliff. It did not. In fact, it outperformed significantly. If you look at last year, when the Fed started raising rates aggressively and global private equity markets sold off, African private equity held up. Our portfolio generally outperformed US private equity in that environment. When exits fell off a cliff and liquidity started to become difficult, which I'm sure you'll have seen in your own portfolios, exits in Africa last year were up more than 2 times in terms of number of exits. We ourselves had our best exit year ever, where we essentially returned about as much capital as we invested. So I think the point of that is that Africa is really a sustained growth and an interesting correlation story that should add value to an institutional investor portfolio. I think the other point to make quickly on this slide is that the opportunity is large and scalable. So we at Sango invest both in funds and directly into companies. When we started our business, the funds market in Africa, the private equity funds market, was less than 100 managers. Today, it's over 250 managers. It's gone up 1.5x, in a decade. The venture market was hardly anything to speak of, and now we're talking about 60 to 80 managers. And so we've seen the market evolve dramatically, and it will continue to do that because those managers are investing in companies that produce goods and services that people need and are willing to pay for. And there's just not enough of them. And so you'll continue to see that market scale, which should allow an institutional investor to be able to deploy capital meaningfully into the market. Next slide, please. I think this slide is important because it does put into perspective the challenges and the opportunity that exist with what we have to do, the job that we have to do. Africa is, generally speaking, larger than most people think. The maps that we all grew up with do not reflect Africa in its typical large size, and this map tells that story. So if you look at this map, I think 2 things are instructive. One is most of the markets institutional investors will have been active in actually fit within Africa's geographic land mass. So you're active, obviously, in the US. People have been active in China, India, UK, Japan, etc. You could take all of that and fit that without much overlap into the African continent. And a good way to think about that relative size is that, for me to fly from the tip of sort of the east side of Africa, Mombasa, let's say, to Senegal, is essentially New York to Hawaii. And the north-south is the same. Now, why is that important? It's important because you need to focus. It is a large area. It is 54 countries, 4 different legal systems, lots of languages. You need to focus. So in our business, we have chosen to focus on 8 to 12 of the 54 countries. I think the second is you really have to be local. You have to have trusted local networks, people that you can call and ask a question. And when they answer the question, you will have the right cultural context around the quality of that information, which then is important in order to manage risk and to find opportunities. So most of our team is based in South Africa. We have an office in Lagos. We have an office in Mauritius. We are hiring someone now in Egypt. And we will continue to do that because local is really a key differentiator in that African context. Next slide, please. Now, I think as we focus in on the farm, I just want to highlight a couple of things that we think make us different than other farms. One, we are an established institutional farm. We've been at this for over a decade. And I started investing in Africa institutionally more than 15 years ago while I was at McKenna. But really for me, actually, private equity started when I was 12. At 12, I had my first real private equity investment, which was essentially figuring out that I could buy a chicken in the village, move it to the city and sell it for 100% profit. Okay. Now, obviously, private equity has evolved significantly since then, and it's much more institutional. But for me, those opportunities have always been near and dear to my heart, and I have profited from them. And I have seen that from a young, fairly unstructured age, and obviously now to a much more institutional perspective. Today, our firm manages over $500 million. We were the first firm of our type to close with pure private capital in Africa. Previous to that, a lot of funds had significant development finance institutional exposure. We raised all of our first fund from the US, endowments, foundations, pension funds, family offices, and we've been fortunate to continue to do that because we have a very strong focus on being good stewards of that capital, making sure that that capital will not be lost. That's job one. Making sure that the risk of capital loss is de minimis, but also making sure then that that capital, in spite of what happens in Africa, will generate a return that's attractive. I think two, we have a very disciplined and differentiated investment strategy. When we started investing in Africa, most investors thought of Africa as they do most frontier markets, which is Africa is high risk and should be therefore high return. And the problem with that is most people then went to try to find the one investment that they thought could give them a 5x. And if they were wrong, they lost their shot. And a lot of that happened. And a lot of times that killed programs, Africa programs for a lot of those investors. The way we've chosen to approach Africa is different. We've approached Africa from the perspective that we think you could build a portfolio that has enough cushion and is diversified so that the risk of capital loss is de minimis. And in the first decade of our investing, as you'll see in our performance, Africa went through a lot of testing. It was the biggest dollar wave in 50 years. It was, you could go around through the different crises that happened, but our portfolio, once the portfolio got out of J-curve, it never went back into J-curve. And although we target top quartile returns, and that portfolio will be a little bit behind top quartile, it will be pretty close to top quartile. Why? Because we focused first on protecting capital and then generating return. I think the third thing is we've built a team that we think is world-class. That's important to drive performance, and we talked about that. And I think the last thing that is important is that there is also an important element to what we do, which is that the Africa opportunity today, what attracted me to move back to Africa, because I left Africa I left McKenna to go to Africa, and I left Bridgewater to go to Africa. And both groups of people actually thought it was crazy for me to do this, because financially speaking, they couldn't see how this makes sense. And I said to them, there's a unique opportunity in Africa, which is to generate attractive returns, but to also do so in a way that has lasting impact in the communities where those returns are generated. And you will see in the types of things we've done and invested in, that has happened. Next slide, please. One more slide, please. Okay, so just to quickly give you a couple examples, when you take the big Africa opportunity everyone speaks about, demographics, urbanization, technology, let's just sort of bring this home. What types of things are we investing in? 8 years ago, we invested in a business in Kenya that today is essentially the CVS of East Africa. Prior to that, there was no pharmaceutical chain. If you wanted to go buy drugs at a pharmacy, you basically called up your uncle or aunt and said, which pharmacy do you trust? They called up the person that ran the pharmacy, and that's how you found your medication. Today, there's a business called Good Life that is about 400 stores. When that business started, it was 2 stores. We started that business alongside a fund. 6 years ago, we invested in a grocery business in Nigeria. Today, if you go around Chicago, you'll have access to a grocery business within 15 minutes. If you went back to Nigeria in 2015, the largest grocery store would have been less than 20 stores, less than 15 stores actually, for a country with 200 million people, 2/3 the size of the US population. We started a grocery business that we partially exited last year, about 5 times money. Today, that business is about 25 stores. It is the second largest. It will grow to 50 to 100 stores, okay? In South Africa, which is a very large industrial market, if you think about the things that drive infrastructure, things like steel production and so on and so forth, there are real opportunities there. So we've built a large industrial business by taking a bunch of small businesses, pulling them together, finding a management team to run them. And that business will be sold this year for a very handsome profit. These are just a few examples to give you some perspective on the emerging consumer opportunity. There's an energy opportunity. There's a food value chain, and there's also an infrastructure services opportunity. Let's go to slide 10, please. Sorry, past slide 10. Next slide, please. One more slide, please. Okay, sorry, one more. The performance slide. Okay, so just a last note to really talk about performance. So we've invested across 3 funds. Our strategy is a hybrid strategy where we invest in funds and directs together. That we believe is important because A, it gets us close to the high quality information flow, and B, it gives us good diversification and risk protection. The objective of our funds, although they have a fund of funds component to them, is to deliver top quartile direct private equity returns plus, but to do so in such a way that our investors can sleep at night. So our investors, when we started our business, every time there was a piece of news out on Africa, they were worried. They called us. They don't do that anymore because they've understood now that the way in which we build our portfolios is designed to essentially eliminate the risk of capital loss. Our fund 1 will underperform that book. It will be a little bit behind top quartile when it's mature. We expect it to be about 2 to 2.5 times gross, and I'd say about 1.7 to 2 times net multiple. We mostly focus on the multiple. It will be behind because it had a huge dollar wave that went through it, and because we invested that very, very slowly in agreement with our original investors, our first investors, for whom, most of whom this was their first Africa investment. We took those lessons and applied them to Fund 2, and so you'll see Fund 2 is tracking much better than Fund 1, and we expect Fund 2 to be in the 2 to 3 times net range, and Fund 3 is tracking even better than Fund 2 and well ahead of where we would expect it to be at this point. Okay. Again, the point there is we want to build portfolios that are resilient, that are diversified, but that can also, in the base case, meet or exceed top quartile direct private equity, and in a high case should be able to perform handsomely well above that. But we want to do that in a way that is sensitive to fees. And so, for example, the Fund 4 that we're raising now, the management fees of Fund 4 will be exactly the same as management fees that you'd have in a direct private equity fund. Last point is, as we do this, we want to do this not just by focusing on Africa as a geography from an investment standpoint, but we want to compare our performance to the best managers around the world, because that is our bogey. That's the option that people that invest in us have. And so you'll see the benchmarks that we apply to ourselves and we apply to managers we invest in, the deals we invest in, is the top quartile direct private equity benchmarks. And I'll pause there and take any questions that you may have. Thank you.
Thank you, Robert. Excuse me. Thank you, Robert. Thank you very much for your presentation. Let me look out, see if any trustees have questions. I wish we could invest in 12-year-old Robert's chicken business there. quite a good return you had at 12. Let me see if the questions here. Yes.
See, I held my hand for a few minutes to make sure I could. That is great. I noticed that you're investing in pharmacies, groceries, so
Yeah.
You're doing a lot with the ESG.
Yes, we are. Yes, we are.
So do you have any other examples that you're doing in that area?
Absolutely. So, so let's talk about energy and power. Okay. A few years ago, we invested in a business called PowerX, power with an X behind it. And PowerX, when we invested in PowerX, again, people who looked at that investment thought that was they couldn't understand why we did that investment. PowerX is in South Africa. At that point, it had the only license to buy and sell renewable power in South Africa, other than the national utility. Okay. So imagine a situation in Chicago where you've got one utility that's underperforming, and there is a license by some small unknown company that basically can buy and sell green power. Now, South Africa has gone through this huge transition where the amount of power that's generated has been a lot less than what people want. And the country has determined to substantially increase the amount of renewable power, solar, wind, that's brought on the market. And today, our business is the only business that can give power purchase agreements to people that generate power that's green. Okay, so that business we believe will do handsomely well. Today, we're in the middle of finalizing an agreement with a large multinational that will triple the size of our business on its own. And we think that that will continue. But what that business is also doing is it's catalyzing green power. It's catalyzing clean power, because most of South Africa's power has been coal-based, which is sort of the worst type of power to have. So that's a business, I'd say, that we're from an ESG is more focused on the E part of the ESG, right? Okay. I think the other parts of ESG that are important is if you look across our businesses, part of our job is to make sure that when we exit the businesses we're in, you could bring them into this boardroom and you could sit down the management teams and they'd sound like any other business in the US. Now, the starting point is not always that. It might be a business that is owned by the family built the business. They don't really have a board. It's the founder, his son, his wife, and maybe a CFO, okay? And by the time we're done with that business has a C-suite of execs. They have 5 years of board meetings. They understand what ESG is. ESG is embedded in how they do business, embedded in how their supply chain works. And that's very important because not just for that business, it's important because all those people, ultimately, some of those people leave that business and they take that practice to their communities, to businesses they run, to people they talk to, and that starts to become the norm of how everything works, okay? So there's a lot of governance work that has to go into the businesses we invest in. And when we're done with them, multinationals buy them because they are exactly like any other business they would find elsewhere.
Thank you. And I am Trustee Nelson. And I admire the fact that you don't use notes. Very good. You're very knowledgeable about what you do.
Thank you. Well, this stuff is real, as you can tell. For me, this stuff is very real, right? So you don't need.
Say you
I don't
started
need
at
notes,
12,
right?
so you've done it.
Yeah,
Okay.
this stuff is very real. Yeah. Thank you, Trustee.
Thank you, Trustee Nelson.
Okay.
Let me see, any other questions, any comments? No?
Excellent.
It was excellent, excellent presentation. You
Thank you.
clearly know your business. Thank you very much.
Where you really, it was clear. So
Yeah.
Thank you.
the question is asked.
Thank you, Trustee Wen. Thank you very much.
We appreciate your time today. Thanks for coming in.
Thank you. Thank you. Thank you for the opportunity.
Okay. Good morning, Bayless, and welcome to Chicago Teachers Investment Committee First Friday meeting. With us today, from left to right, we have Trustee Weiss, Trustee Vincent, Trustee Nelson, Trustee Washington, Executive Director Lenore, Trustee Blackwell, Trustee Price Ward, Trustee Riley, Trustee Ochoa joining remotely, and Trustee Rodriguez, our Chief Investment Officer, Fernando Vincents, our consultant from Callan, Brianne Weymouth, along with investment staff. You'll have 15 minutes to present, followed by 5 minutes for questions, and you may begin your presentation now.
Thank you very much. Good morning. I'm privileged for the opportunity to present Bayless Emerging Markets. Bayless is a firm that has a diverse ownership base, founded by myself and Nicholas Martin back in 2016. Prior to that, I spent the better part of 20 years in investment banking in New York and London principally, firms like Bank of America, Deutsche Bank, et cetera. We set up Bayless to focus on financing industrialization across Africa, and we do that in a very specialized fashion. We feel that in Africa, it's very important to have operating and industry expertise in the investments you make, because most of the value creation is going to be in terms of operational changes, not financial leverage. So our industries of choice are manufacturing and telecommunications in particular. We have an ESG impact overlay, and we do have a gender lens focus as well, and have a gender balanced leadership team. In terms of the backing of our fund today, it's principally family office, and our largest investor is Mr. Michael Novogratz, who was the founder of Fortress Investment Group and previously a Goldman Sachs partner. Our thinking back in 2016 was to have a firm that had a U.S. nexus involved with our investing style. And as such, we've been very active in increasing the U.S. engagement with Africa. I'm honored to serve on the U.S. Presidential Advisory Council for Doing Business in Africa, advising the president through the Department of Commerce on ways to increase our participation in African investing. We are targeting a $100 million fund with a $150 million hard cap. Of that amount, we've raised approximately $20 million. We hope for a first close of $30 million. So just getting into the presentation now. As I said, we have a very narrow focus on telecommunications and industrials. That's very intentional. We think those are two areas that allow private investors to harness the demographic trends in Africa. You hear a lot about the growth of the population size and the growing middle class. Well, how do you as a private investor leverage that for your own financial return? And we do not think it's a good idea to sacrifice financial return for impact, because the impact needs to be sustainable, which means investors need to make money. So we take the stewardship of the financial investment very seriously. On the industrial side, right now, there is a very big opportunity to do friendshoring, bringing the global supply chain away from East Asia, where it's highly concentrated, into lower cost markets that are friendlier to the United States. Africa could be one of those places, and therefore there's a lot of, because of the growing population and their consumer demands, the consumer needs, bringing some of that production capacity locally not only provides them the opportunity to export to places like the United States and Europe, but also to serve the large domestic market. So you have the scale of that domestic market underpinning your investment in a manufacturing opportunity. And because of the dearth of capital in the African landscape, you can get very, very good terms. We often buy companies at a 4 to 5 times EBITDA multiple, sometimes even better than that. And we often find that we don't need to be a buyout to anyone. We like to keep, so we're typically a significant minority or slight majority owner of a company. And that allows the local partner to keep skin in the game, which helps to be a buffer to some of the local issues that you may have. So we focus on these middle markets investments in these job creating industrial sectors. And then on the telecom and digital infrastructure side, that's where we see opportunities for intense growth. So we get stability from the industrial investments, and we get real outsized growth opportunities on the digital infrastructure side. So these are investments in things like data centers, optical fiber cables, towers, satellites, et cetera. And again, when you think about that demographic change that's going to happen, I think the African continent is going to grow double in size by the end of the century. And something like 1 in 4 babies born in the next 50 years are going to be born in Africa. So you're going to have an enormous population bubble, sort of bulge. And those people are going to be young. It's going to be a youth, 80% of the people in a place like Nigeria are under the age of 40. So what do young people do? They use their phones, they use social media, they're in contact with one another. And what we want to build are the nuts and bolts of that communication. So one of our projects is to build the first subsea cable directly from the United States to the African continent. We call it the Afro-Caribbean Gateway. That's a project that's already underway, working closely with USAID and USTDA on that. We are in the process of closing what will be our first major transaction in South Africa right now. Again, this is an optical fiber company, which is very well established. It's been around since 2007 in South Africa. And the idea there is to take them north of the South African border into less developed, higher growth areas like East Africa, Kenya, West Africa, Nigeria, and Ghana. Take that expertise and take it into these other areas where it can grow. Now, importantly, in doing something like that, and this is true throughout the way we run our fund, and I'll come into our team shortly, Our team is very balanced between financial people like myself, and then, if I'm on slide 6 here, and if you look at the team, we've got myself. I come from a banking background. My partner Kemi Abdul, she was worked at Mubadala Infrastructure Partners since their founding, and did about 14 deals, cradle to grave. Has an excellent portable track record in private equity. And then Nico Martin, who comes from Ashmore, which is the largest manager of emerging market funds in the world. They manage over $80 billion. He helped run their $7 billion private equity fund, did deals across North Africa, did their first deal in sub-Saharan Africa, Nigeria. He has a 48.1% net IR portable track record. So we have a very strong, and obviously our anchor investor, Michael Novogratz, is well known for delivering financial performance. So we have that group of folks who focus on the sort of analytical financial analysis. But then if you look at the bottom of the page, we have on the telecom side, 4 individuals who have, each of them have 30+ years of C-suite experience in African telecommunications. So Adrian Wood was the founding CEO of MTN Nigeria. He took that from zero, from an idea, a sheet of paper, to today 78 million subscribers. That business generates $4 billion of EBITDA per year. It's the largest in what's a very large company's. It's the largest asset in what's a very large company. Tony Dalton was the CEO of Unitel Angola. Before that, had a long career at Vodafone, where he was CTO Vodafone Ghana and CTO Vodafone Egypt. Randall Hato was the CFO for Zain and for Airtel, some of the largest telecommunication companies in Africa. And Demola Alessio was the CTO with Adrian in setting up MTN Nigeria. So we just think that there's no substitute for experience. Finance is great, and knowing how to do spreadsheets is great. But at the end of the day, you need to know how to operate a business, optimize unit costs, get more sales going, expand distribution. And the only people who know how to do that are people who've done it before. So we feel privileged to have that wealth of industry experience. On the industrial side, we have a gentleman called Andreas Soteropoulos. He was the head of operations for a business called Flour Mills of Nigeria. Not a big name in the US, but it's the largest food business in West Africa. They do over $3.5 billion of top line turnover per year. It's owned by an American, actually. And so Andreas and I actually go back 30 years. So that's another thread throughout our organization. We've all known each other for quite a long time. So we know each other's strengths and weaknesses, which is important because we are a first-time fund. So having that continuity amongst ourselves as individuals is a very important factor in what we hope will be our success. So I think if you talk about differentiators, we do highly value that synergy of financial expertise and industry expertise. And one of the things that I think has been difficult in Africa, fund management, are things like exits, are things like, what happens when things go wrong? How do you course correct in an investment during your investment period? And we hope and really believe that having the industry expertise on hand on the team from the beginning, in terms of the networks that these people have, in terms of finding buyers for investments that we make, thinking creatively about ways to monetize and harvest returns and get them back to our investors. This is sort of a bit of a tangent, but my father was a union worker my entire life, DC 37 in New York. He worked as a social worker in New York City. That labor pension fund paid for my education, paid for my healthcare. So it's a sacred responsibility. So, as much as people talk about impact, there are retirees who need this money, so you can't avoid that. So we tried to have a well-balanced team, we think, that will try to finally harvest the potential of Africa in the form of actual financial returns. I mean, I think that's, if one thing I want to leave you with, it's that. Just going into the geographies we cover on slide 9, we're really focused on and intentional about the places where capital is dear and scarce, and therefore we can get the best terms for our capital. In Southern and Northern Africa, those are relatively more developed places. There's a lot of local capital that understands those geographies much better than anyone from the outside. South Africa has a very large capital market, a lot of wealth there. North Africa has a lot of access to the Gulf. So we focus on West, Central, and East Africa, both Francophone and Anglophone countries. You have the biggest population growth there. You have massive urbanization there. Now, you do also have more difficult markets. They're less modern. They're less organized. But if you have boots on the ground, and we have offices in Lagos, in Kampala, in Nairobi, and Dakar, as well as a small office in Johannesburg. So we have the ability to be on the ground, making sure that we're, taking care of our investments and addressing any issues as they arise. Moving on, I'm on slide 11 here. We think that the best way to make money in Africa is to partner with entrepreneurs. So we work very closely with our partner companies when we make those investments, and those relationships take time. There are companies that we've not invested in yet that we've been talking to and working with and offering ideas. I'll give you an actual example. We met a steel manufacturing company in Benin, for a French-speaking country in West Africa, next door to Nigeria. And that company makes things like rebar, trapezoidal products, construction materials, principally. We hired a gentleman from Peugeot, a metallurgist, to come down, spend 3 weeks with us in country at their factory, got to know their, actually went to church with their production manager. And we were able to identify for them 15% operating expense savings. So we were able to do things to change the way they do their production, and pulled out 15% of costs in their operating expenses. And that was something we did. This is still a relationship we're developing. So by the time we get in there and make that investment, hopefully the owners see value in the relationship with us. And I'll just say one last note on the way, one of the things that you find in these companies is that you'll have a very experienced, a very talented owner, and you don't necessarily have a lot of depth in the management below that. So one of the programs we've instituted, and we're working on this with entities like Howard University, Morehouse, and NSBE, the Congressional Black Caucus, is a secondment and internship program. So bringing Americans who are talented interns to come have an experience working overseas in our companies, and then also a mid-career secondment. So someone who's a general manager, a production manager, a marketing manager, at Procter & Gamble or somewhere. We're offering them the opportunity to have a guided, experience in country at one of our portfolio companies. We get something out of it. They get something out of it. What we get out of it is access to hard skills, which are hard to come by in some of these environments. And what they hopefully get out of it is maybe a slight, push in their career, and an eye-opening experience in a very exotic market that they can bring back with them. So that's something we're very proud of that we're building. Just to talk about our impact on slide 13, we have 3 layers of impact. The first, I think, is around gender. We do have a gender lens, so we have a commitment to 1/3 of our investments being in women-owned, women-led, or companies that provide products that specifically improve the lives of women. That's been in our DNA since our founding, and it's something we take very seriously. Our first investment actually is a company called Legendary Foods, which is operated by a very dynamic woman based in Ghana. They are doing insect protein, of all things, insect protein. So it's a double one for us because it talks to our second, which is climate. We have a climate overlay. Meat production, which is a big thing here in the Midwest. So I don't want to offend anybody, but it's very climate intensive. And so there's a big movement now to look at insect protein, either in powdered form or even in the actual larva form, as a way to supplement protein markets worldwide. So that's something we're excited about. And then lastly, I talked about the climate. So in all of our investments, we look for ways to make the business more climate sensitive. So we do not believe that you should run away from a company that's not doing things great with the environment today. We actually think it's more impactful to work with a company and see if they can treat their effluents better, if we can bring in solar power into the mix of what they're doing, and just give them that rationale. And one thing we find, by the way, is that folks who you work with who can meet those kinds of targets and KPIs, generally it's a good proxy for their governance, right? If they can take that concept, really drill it through their institution, that's typically a pretty good leader. And then lastly, for us, it's job creation. We think employing Africa's young people is not just good for Africa, it's good for the entire world. I don't know if you've seen the images in New York of migrants and all of this, coming. Look, I mean, if these people can't find jobs there, they're going to find jobs where they can find them, and we think keeping them employed in dignified employment that's remunerative back home, we think that's a good idea for everybody. So that job creation, that skill transfer is something we take quite seriously. The US government seems to like it quite a bit as well. And that's why they work with us closely on some of these projects. So take you to the last slide, slide 15. You'll see there that we're a pretty standard set of terms. We are a typical GP/LP, 10-year life fund. The investment period is 4 years. It's nominally a Mauritius domiciled entity, but we can accommodate investors as they need, whatever their needs are. We're targeting 100 million, as I said earlier, with a $30 million or $40 million first close. I mean, we're eager to get going with a hard cap at 150. And what else can I tell you? We have concentration limits, so no industry will be more than 30%, no country more than 25%. And we're offering 20% IRR with an 8% hurdle rate. I'm happy to take any questions if there are any.
Thank you, Franklin. Let me open it up to trustees here. Yeah, just please.
Thank you. I thought the presentation was great. I'm just curious because I noticed that you mentioned explicitly that your group is targets. You want to create jobs.
Yes, ma'am.
I'm just wondering, what is labor like? Is there organized labor in these companies? Do you guys, what are the feelings toward your group? If you go into a company, like they're pissed that Starbucks is organizing. What's the type of labor relationships that you guys have?
Yeah, no, it's a great question. And it varies by country to country. Some countries have very strong, very well-developed labor unions, labor organizations. There is a budding pension industry on the back of that as well. So one of the things we want to do is tap into local funds with local pensions. And they're very eager to meet people like you, by the way. They want that skills. Look, we think that I was the words were chosen intentionally. I mean, it's about dignified labor, not just labor, right? Because you need people to feel good about coming to work, and you've got to remember that these individuals who work for you they're members of a community, right? And they're often leaders in their community because the job you're giving them is often above market, from what they can do. So, we look to empower that workforce. One of the things that's really important for us is the skills transfer piece. We look for opportunities where we can also incentivize people to work with us by giving them opportunity. I'll give you an example. In some of the projects we've had before, in terms of procurement, in terms of sourcing raw materials and inventory, we'll go to someone who's staffed now and try to set them up as a business owner to supply us. Getting and often in these, maybe it's true in America too, but and you never know who you're dealing with, right? So for instance, that production manager I mentioned that took me to his church, he was a chief, a local chief. He wasn't a CEO or a CTO or whatever, but had we not done right by him, it could have been, very, very difficult for us. And one of the things we look for in our due diligence actually is outstanding labor litigation issues and problems. And it won't necessarily deter us, but it's something where we know we need to have a solution in mind with the labor group because in countries like this, there's not the high level of mechanization you see in America today. So labor really has a big impact on your outcomes.
Thank you.
Yes, sir.
So, so you all invest in startups? Is that what I heard you just say? Or somewhat? Some of your investments are startups?
We're generally growth oriented. So we want companies that are established, have been operating for a little while. But we will look at turnaround situations or a new project of an existing company, mainly to get a price advantage. If things aren't perfect, you can pay a little less money for them, but you have to really be confident that you're going to be the one that can make the difference, right? If we don't think we can do it, we'll stay away.
Okay, and then one other thing that I think I heard you say, you talked about the environment.
Yes.
And how, you know, the companies that you're investing in are impacting the environment, which I think is pretty important to all of us. Can you elaborate on, you made a statement about, and I'm paraphrasing because I don't remember exactly the wording that you used, but you talked about investing in like companies that maybe are in, for example, fossil fuels for the purposes of engagement. I think that's the word I'm looking for. So that, you know, you can engage with them to get them to meet certain standards to transition, like from, hey, stop burning the coal and put some solar panels on the roof.
Right.
That type of thing. So can you elaborate a little bit more on that, please?
Absolutely. No, it's a great question. And, you know, one of the things that I think is missed is that because Africa isn't at a level of development that the rest of the world is, there's a huge opportunity, right? Because you have an opportunity to have sort of a petri dish of how do you industrialize in a climate sensitive manner, right? You know, these folks need jobs, they need products, they need to be able to manufacture, they need to be able to produce. So you can't tell them to not do those things. You can't tell them to not have power, right? But what you can do is try to say, okay, let's look at ways that we can do that, and that's not going to be as, you know, carbon emitting as, you know, we've done in the past, right? We you know, we've had 200 years, luckily, of industrialization or thereabouts to have lessons which can be applied to a newly emerging terrain. So that's something we think is exciting because you can probably be focused on the environment without sacrificing the financial piece. You know, we think there's you know, you can sort of thread the needle there a little bit, which I think is an exciting opportunity.
Can I ask one more question? To that point, what is the governance like over there with, because, you know, that's a political football here, when it comes to, you know, ESG or global warming even. So how does the government in these various areas that you all are investing in impact that, which would ultimately impact the way that you all invest?
Yeah, it really varies. You know, I think you find some enlightened thinkers around this topic. But there are realities. You know, big countries like Nigeria, big countries like Ghana are commodity exporters by and large, right? So there is some resistance to some of these ideas around, you know, moving away from fossil fuels, for instance. Less, you know, when you're talking about very poor people, it's hard to get them to understand that, you know, how you treat your wastewater is very important, right? You know, they're just more worried about the bread and butter issues. So we find that we're sometimes out front in terms of, but that's our responsibility. It's our private investment, right? So in that private investment, we have the ability to push standards that may be ahead of the market. But what we hope and what we expect is that the performance and the wealth creation that happens in that company will have other folks look at that and say, well, maybe that's a model. I mean, these guys figured out how to make money doing it. Maybe I should try it. But you do have countries like Gabon is a very good example. They have a very big tree canopy in Gabon, very similar to the Amazon. And they've been a leader in looking for ways to do carbon credit monetization, you know, figure out ways how to, you know, because they're a carbon sink, they're actually a carbon sink. So they're working on ways to make furniture in a climate sensitive manner. So you do have it does vary, but I would say that in the main, you know, ESG is something that we're educating people on oftentimes.
Okay, thank you.
Vice President Price Ward was next.
What caught my attention from the presentation was your internship program. Could you just explain how you bring Americans to Africa and what's your selection process and kind of lay it out? Because I think it's really intriguing.
Yeah.
I would just like to know a bit.
Thank you very much, ma'am. Yeah, it's something, it's one of the things I love talking about. It's a new program and it's come out of experience, really. So my parents are Nigerian immigrants, Nigerian American, but I grew up in New York, right? So, you know, I didn't know much about that. And so when I started working in Africa, it was around 2013, 2012, thereabouts, you know, I came as an alien, right? So, you know, it was a very, there were a lot of things that I had to learn very quickly, and, you know, there were uncomfortable moments and so on and so forth. But then I saw the opportunity, right? So that it occurred to me that when you bring an individual into, you know, an opportunity, you can't just focus on, okay, well, they know marketing, it's a marketing role, and there's all this, you know, they're a human being, right? They might have a wife, they might have children, there's education, there's all these other things. So we figured, you know, how could we recreate the cocoon that I sort of have developed around myself over time in terms of, you know, navigating that environment. So it's a curated experience. That's number one. So for the interns, it's a summer program, just like a typical internship at a company here, but we put them up in our own residential facilities. We're only doing it in a couple of different locations where we think it's manageable. So this will be at Dakar, Lagos, Nairobi opportunities. Those are the cities that we would have someone sitting in. And, you know, they would have, you know, quite frankly, it's kind of a nice lifestyle. I mean, they'd have a driver and a car and people cooking for them and all that sort of stuff. So so that they don't. Right. Well, so we're piloting it next summer. For this, I'll start with the internship program. In terms of selection, right now it's Howard and Morehouse we're working with, purely because I had friends who were there, and we're letting the school select the people, and so they come to us, and obviously we interview them and work with them, and bring them in. In the mid-career program, which is obviously, you know, more mature, more experienced people, those are very role selective. So in our portfolio company, we might have been struggling with, you know, marketing. We want to really get sales moving. We want to grow. We want to get more market share, or something around, you know, production process in a factory. So we want someone with those skill sets. And, you know, similarly, it'll be a curated experience. The person will be, you know, they might have children, they might have a spouse. So we have to look after, you know, school placement, you know, putting them up somewhere suitable, et cetera. Now, the benefit to us for all these things are, you know, when you think about, the reason why this started was because when I had to go to headhunters, typically European, this is like a European thing primarily, to place professionals with certain skill sets in a place like Africa, you know, what that costs, is that this will actually save me quite a bit of money, if I'm honest, right? Doing it this way, even with all those luxuries and creature comforts, you know, the price point in a place like Nigeria versus what that would cost to facilitate here is very, very different. But the person does have a very, very comfortable lifestyle, so they can just focus on work and focus on getting us moving. You know, there are specific things we need done in some of these portfolio companies where, unfortunately, in many of these countries, the talent just doesn't exist. And for the right person, you know, who might be languishing mid-career and feels like things aren't moving, and I've been passed over promotion a couple of times, you know, maybe it's interesting to have a leadership opportunity. You know, you'll have to get to know the environment, which will help with. And what's useful is that, you know, we've done a lot of work in ingratiating ourselves locally. So, you know, we know the embassy, we know the ministers, we know leading people in society, we know the big owners of companies and businesses. So, you know, we'll ingratiate them into that milieu socially, which we think will help them professionally in their job as well. So we hope it'll be a really enjoyable experience really for these people for a couple of years, and then for the interns just for the summer.
What is the number? You said that your source is Howard and Morehouse. How and they select people, and you interview company, interview the candidates. How many candidates do you actually bring over?
Yeah, so the pilot will be next summer. I think we're targeting 6 for the young internships and the same number for the secondments. And that reflects our portfolio basically. But we hope the program grows. I mean, if it does well, so that's the hope.
So this is like a little pilot.
This is a pilot, yes.
Excellent idea.
Thank you. We hope so.
Thank you.
Ma'am?
Thank you. I mean, Trustee Nelson was next. No.
Okay. Yes, thank you. At any rate, I'd like to piggyback on Trustee Floyd's, you know, suggestion and question and you. Okay. At any rate, And because my question was, I noticed that there's no EEOC here, and you have exposure everywhere. So my question was thinking about, do you have any actual Africans in high-level positions in any of these areas? And I asked that question because I went to a conference about fine metals. And so my base, and uranium and all of, the gold, everything. At any rate, now we don't, invest in that, but I like to know about everything. So anyway, I asked, so where do these metals come from?
Right.
And I was given the name of every European, in fact, Australia, never Africa. So I'm thinking that the Africans must only work in the mines, but none are involved in the completion process. So that's kind of why I asked that.
Sure.
And for what your company is planning to do will bring about that higher level.
Right. So I'll address it this way. I'll say, one of the key opportunities, today's challenge, but it's a real opportunity, is to bring African companies up the curve into the more beneficiation aspect of it. So that, that manufacturing was very intentional, because unless they are adding value to those raw commodities at home, the wealth creation is really never going to happen. If that wealth creation doesn't happen, then you cannot create the jobs, and you cannot create the sort of stability, right, in societal stability that will make the continent less closely associated with poverty, right? And then for us as investors, you're selling a higher margin product. You're able to create more margin in that product because you can do it at scale. And the owners of the companies that we work with are indigenous Africans by and large, right? So, our partners, there are other groups. I mean, there are a lot of Indians present, there are a lot of Lebanese present, there are a lot of, Greeks present, there's all sorts of people present. So we'll sort of work with anybody, quite frankly, but typically, it's Africa. So the companies are owned by Africans for the most part. And we work closely with them. And our team is reflective of that as well, right? So our head of East and Southern Africa is Kenyan, for instance. My partner, Kemi, is Nigerian, for instance. And that's necessary because at the end of the day, these markets have cultural nuances that, are important to be successful. So we have a pretty balanced team, because one of the things we want to be careful about, and I was a little bit intentional about, is we also don't want to be romantic about our investments. At the end of the day, we're trying to make a financial return, right? We're not in the Peace Corps, right? So, the cultural piece is important, and knowing the minister is important, and all that good stuff. But, we do have an office in New York for a reason. I mean, we want people who have a little bit of a distance from the investment that we're making, who are looking at it hard-nosed. Will we make money? Does this make sense, right? So we like to keep that balance.
Thank you.
Absolutely.
Mary Sharon?
Yeah. So I guess go back to your beginning.
Yes, ma'am.
When did you get interested in working with Africa? Because you are an American.
Yes, ma'am.
Your parents are from Africa.
Yes, ma'am.
So what prompted you?
Yeah, no, I would have to say it was in business school. So I was an investment banker, and I went to business school in 2007, I believe. And at business school, I met people from Africa, which at that time in my life, it's kind of like you watch the movies and people talk about the old country, right? So at home, my parents talked about, oh yeah, that was about it, right? And I didn't really think much more of it. But I met these folks, and they were so dynamic. They were working in all these very interesting industries, and many of them own businesses. And I just said, wow, something's going on in Africa. I should check it out. I had the opportunity in 2000, I believe it was 2013. The woman who had become the finance minister of Nigeria, her son was college roommates with my brother. And so she was a reformer. She had been at the World Bank. She had been based in DC for quite some time. So she came back with all these reform ideas. And Nigeria, if you know anything about it, it's a tough country. There's a lot of corruption, a lot of issues. And she felt she needed help from people who were outsiders. So I was part of a small group of people. And most of us were quite young. I was probably my, 30s at the time. She tried to set up a sovereign wealth fund, which is now Happy to say a very large and well-established sovereign wealth fund at this point. I think they have about $3 or $4 billion in their management. But it was a deep end kind of experience. I remember I was at the finance ministry in Abuja, the capital of Nigeria, when they stormed the ministry because she had made some policy that people didn't like. So, we were held upstairs. and so, so very quickly you started to learn that there were a lot of nuance about doing business that were going to be a bit different. So I spent a lot of time learning. And quite frankly, trying to do this from the companies I was working at the time, because that would have been a lot easier. I was working at a big bank, but they just didn't have the appetite. So it became clear that if I wanted to focus on Africa, I'd have to set up a firm. So we were sort of forced entrepreneurs, me and Nico call ourselves. He was at a place called Ashmore, similarly, which while it did a lot of emerging markets, didn't do a lot of Africa. So we were introduced by our third co-founder, a woman called Arby Ruby, who's now a senior advisor. She's from Denver, so she has no connection to Africa, but we got together and said, what would a US-based company trying to invest in Africa look like? And we started to put that together and then started to fundraise. But yeah, it was a combination of meeting interesting people, seeing a place that was growing and developing, and trying to be at the beginning of something, so to speak. So that was what attracted me.
And it's a vast opportunity. I mean,
yeah, I hope so.
yeah.
Yes.
I mean, it's there.
Absolutely.
There for the taking.
Absolutely.
Thank you.
Thank you, ma'am.
Thank you very much, Frank. Excellent presentation. We really appreciate your time today. And I hope you communicate to New York that Chicago pizza is. I'm just kidding.
And the White Sox and the Cubs, I'm sure.
Thank you so much.
Thank you, sir. Thank you very much. Thanks for everyone's time. Privilege.
Okay, I have just a couple of house cleaning items real quick before adjournment, unless there's anyone. Let me cover just a couple quick things. Just as a reminder, our next investment committee meeting is August 22nd. In addition, at the August 17th board meeting, I've asked Callan if they would please, and our investment team will provide an educational session on private equity, as well as a report on our fourth quarter 2023 performance regarding private equity funds. I felt like trustees should have some education since we have good exposure to private equity and we need to learn more about it and both the benefits and the risks as we hear here today. So thank you very much. Good. Fernando?
Yeah, just I guess to summarize, after hearing all four firms, I'm almost seeing a current generation and next generation of Africa investors. So you had the prior generation that kind of more incepted out of Europe, because of the physical proximity to Africa, and then now you're seeing the next generation of folks. It's almost like, again, what I think Asia saw, the reverse brain drain. People who studied here and are going back and using what they've learned here and are applying it to Africa in such a, like you said, a very vast opportunity. So I think it was these were great presentations. Sango is intriguing because their think structure is both. It's somewhat they'll invest. It's like a combined fund of fund, and they'll also do direct. So that's interesting. I think they've learned from their first two funds, and they're now applying it into their third fund. And then Bayless also, while a little bit more concentrated, they're also picking their battles. They know where they think they can add the most value. In looking back to the first two funds, the ones that were invested in, I think one of the things that I'm hearing from you is, I think we would like a little bit more regular touch points with them so that we stay on top versus 3 or 4 years in between.
Yeah, that was too long.
Right. So we'll also try to supplement the performance report that Callan puts together with some things that we can tease out, pull out, so that you're in the know a lot more regularly with some of these funds, well past the initial commitment. So we'll attempt at giving you a little bit more insight into some of these funds. So we'll be back to you on that one.
Please.
Okay, thank you. Both of those firms, Sango and Dallas, have a lot of things that are in common. but both of them are very different in how, you know, and what things they're investing in, and whatever. And since we, as a fund, can actually invest 10 million to do unknown callers. I'm, you know, can I kind of put it out there to look at both of them, since we're thinking of adding, you know, a little bit African.
Okay, I'm at a meeting, so I can't talk.
So that would be like, you know. to
Sure.
look at what
Yeah,
comes
yeah.
with both of them. And because it just looks like, you know, we might really benefit.
Mhm.
from
So yeah, you know, in probably about 6 more months, we'll see the next pacing study from Callan on private equity, and so we can certainly start to look to see how we can maybe reallocate back to new funds, new blood, new thinking. So yes, we will look at that.
I'm just curious, just due to the denominator effect, what percentage do we have right now in private equity? Are we over the 8% target?
We're closer to, are we 8 something? Summer, do you know roughly? We're definitely 8.2.
Yeah.
And again, our target is at 5%. Yeah.
It was at 5%, but now we did the asset allocation study and we.
Well, that's a modified target because again, you don't, private equity takes longer to kind of wind that down. So we have to, everything has to foot to 100%. So we move kind of that target because otherwise we'll run over 100 if we just stick to that 5%. So that's why it's just kind of a marker to at 8% right now. But as we wind down, the denominator effect starts to lessen. You know, our target's still 5%, and we're still shooting for getting us back down to 5%.
Yeah,
But since we're coming
Okay,
out.
thank you.
I forget about this, but anyway, since we're coming out of the fossil fuel area and we're lessening in that area, could, you know, and this is what I'm saying in terms of perhaps being able to go into more ESG.
Sure.
Which is what has been presented today.
Yep.
Mhm.
Absolutely.
I had a question. And speaking of that, I wanted, when will we get a report on how we are transitioning to meet our divestment from fossil fuels? I would like to see a report on percentage that we are investing in sustainable energy and whatever we can sustain in, we can invest in that is transferring from the fossil fuels.
Will do.
Thank you.
But the language, I think, in the policy that we wrote is divest and or offset, right? I mean, because I think we want to be mindful if we're, and I'm an agnostic investor. I certainly don't want to have anything more in fossil fuels than anybody else does, but I also don't want to leave money on the table too, right? I mean, you know, so we just have to be mindful of that balance, and that's the policy. We have to implement the policy according to what we've all agreed on, and I'm not trying to say anything controversial, right?
In terms of the policy, we have not made new investments
Right.
in fossil fuels, but they have been grown, they've been beneficial. And I just want to know, what is the process right now of transitioning according to the policy that we voted and agreed?
Thank you. Thank you.
Yeah, because to that point, that's why I was asking these questions. So, you know, as we're thinking about the way we're investing, wherever we put the money, private equity, I don't care. You know, it could be a Mickey Mouse for all I care, as long as it's going to be beneficial to us as a fund and it's not going to kill the planet in the process. So that's, for me, as we're thinking about transitioning away from fossil fuels and we're looking at places like Africa, where all of this, where this is going to be the place where everybody is headed to get their you know, to really see some returns, because, you know, the data don't lie. And 20 years from now, we'll really start to hopefully see the real benefits on the continent of Africa, you know, with, you know, the infrastructure and stuff being built. Everybody is digitized, because I mean, think about it. young people, heck, old people. If you're a person that's into digital stuff, you're gonna need the internet, you're gonna need phones, you're gonna need, that's just that, 25 years ago when I went away to college, well, 27 years ago, when I went away to college, a cell phone was a commodity. That was something nice if you had it. My first cell phone was a prepaid AT&T phone that I got because I got stranded on I-44 driving home from Oklahoma one Christmas. And I said, I shall not get on the road again without being able to call 911 should I get stuck. But that was, again, 25 years ago. But now you got 6-year-olds that got cell phones.
That's right.
Here. In the States, and I'm sure it's like that over in Europe and other parts of the country, of the world. And so I'm circling the airport to say, I would like to see us really seriously looking at, I would like to see, for me, a priority is, whatever we're investing in, aside from the social impacts in the community, which is equally important, what is the carbon footprint that's being left behind in the process? And how can we leverage our dollars in these spaces, because it could be that maybe, to the point that was just made, maybe we do need to really rethink our allocations in those areas to, if it's profitable. I'm not saying, throw money out the window, but I am saying that we should be very diligent about that, because, we don't want to be on the last folks getting on the train headed towards getting the good returns because we got a 5% margin. We're not gonna go over. That in my head does not make sense if it's profitable and if we can make it make sense.
Yeah, and again, I think what I'm seeing and hearing from, again, Generation 2.0 that investing in Africa, they're really sensitized to the ESG impact. And they've seen, I think, what Generation 1.0, they didn't really care about, ESG. And so they've seen the impact on their countries. And so they want to operate a little bit differently in how they invest in those countries and what companies they invest in and what kind of impact they can make to the environment. So they're really thinking like global citizens rather than local investors.
Wasn't I next?
Thank you. Also with telecommunications, see, that's big in Africa now. I remember the first time I left the country and, well, the second time, but I went to Korea, where my son is, and my daughter was with me. She was dying because the only way she could communicate was email. But kids her age were not sitting at the computer trying to communicate with email.
Mm-hmm.
The phone system, it was horrible, but that is a tremendously growing market. And that's what I'm seeing in all of these presentations. Energy, telecommunication, electricity, those kind of things. So I'm just trying to find ways, clean energy, where we can start, get with these companies and that are ESG focused and focused on the impact of what it is, what will happen if we don't do it. I think that we can jump on that. I just want it to be the due diligence done and consideration paid to on the front end so that we can be at the beginning of the market, not let's see what everybody else is going to do and then we'll come along, but we've missed opportunity.
Right. Understood.
Mhm.
Yeah, and those industries are great sources for unlocking and tapping human capital. We've seen it in a lot of countries, right? As soon as faster internet opens up, communication opens up, I mean, it just wires everyone to start collaborating, and the ideas that come forth from that are just unbelievable. So.
It looks like you got your work cut out.
Yes, indeed. Yes, indeed. Thank you.
I
will be gainfully employed. So
I'm going to put out a motion to adjourn.
Thank you.
Oh, I'm sorry.
Yeah, you left me out.
I'm very sorry. I didn't see it.
I had my hand up a long time
Please,
ago.
before we adjourn, please.
Two things one thing I was going to talk to Fernando about what Adam Street does with these things, because he and I attended a conference a couple of weeks ago, and they're at the forefront of private equity. And I'm sure they're one of, if not the biggest, one of the biggest with their funds.
Yep, they sure are. I mean, we have a very active program with them that resets every 3-4 years, and I think they see a lot of opportunities here in the U.S. that will then eventually gravitate their way to other countries. So, we certainly, I think, are informed about what we can expect for the next, kind of countries that start to adopt these technologies. So yes, absolutely, Trustee Riley, I agree with you. We have quite a bit of partners that allow us to look at, what could be for other countries.
Right. And then the other thing about energy and fossil fuel, we can't exit it too fast because we're going to pay. We don't want to pay $10 a gallon for gas or whatever we're going to pay to heat our homes until we can transition out of it. And that's not going to happen overnight.
Yeah, that's true.
I mean, we're not even supposed to be cooking with gas because that's dangerous for us too. I mean, how did we get here? Nobody was watching the store while it was happening.
And I hate an electric stove. They just don't cook the same.
No.
That induction top, that is the devil.
I'm sorry.
However, Fernando, our philosophy right now, though, is more to engage with the fossil fuel company, correct?
That's right. So again,
yeah.
we're about to embark contracting with Glass Lewis, and we are working on the policies about how we're going to make sure that every vote counts where we want them to count. So all those things will be reflected. That's how we've chosen to engage. Right. Absolutely. And then again, later on this year, if not sooner, we're trying to figure out ways to, how do we, that roughly 350 million in coal, oil, and gas exposure, what do we do? Is it find passive funds that are, have no coal, oil, and gas exposure, and so reduce that. So we're looking at different ideas. So we'll be back to you on that, on some thoughts.
Yeah.
I'm a fan of carbon capture, just so you know. I'm a fan. Thank you so much. Appreciate it.
Thank you.
Motion to adjourn.
So move.
Second.
Roll call. Or do we have a? Carolyn, will you please do it? Thank you.
Oh, you want me to do it?
Is that all right? I feel like I lost. Oh, please. Yeah, I'm sorry. Hold on, let me get my notes together. Actually, do you want to just speak for a moment?
We did start the search for the international equity investment manager. That was posted on our website yesterday. So as you know, as a reminder, the quiet period starts until we finally award or select or make a decision on what we're going to do with that search. So we are expecting, I think, sometime in November to bring in finalists and then make a decision before the end of the year.
Right now, we don't know who is going to respond.
That's right. That's correct. Yes, it's just started. We just posted it on the website.
So we want to be respectful of the process.
Right, that's correct.
Hi, this is Cheryl. Just to piggyback off of how's everybody, by the way, just to piggyback off of my CIO special, Mr. Then the quiet period goes through contracting, not just through.
Okay,
selection.
gotcha. Thank you, Cheryl.
Yeah.
You're very welcome.
So it has begun.
It has begun. That's correct.
Okay,
yes.
so we need to be mindful of the process. Thank you.
But as Cheryl, can I say?
Yeah, go.
As Cheryl just mentioned, until we know who is involved in the quiet period, you can't do something when you don't know who.
You have to avoid everybody in that.
I think you just can't speak specifically about the terms of the search to.
No. What I'm saying is no one's gonna walk up to you and say, okay, I'm from Be Black industry and I'm in the search. Nobody's gonna do that. But what if you're talking to someone
I'm submitting RFP. And I want
You know, you understand what I'm saying?
To answer your question, trustee Nelson, as soon as people begin to respond, I will put out notification to all
Thank you.
trustees of who has responded to the search so that you know if Tom, Dick, and or Harry walk up to you in the street, you'll know.
Right, thank you.
Press them.
That's exactly it.
Thank you. Can we do can we adjourn or are we good? Okay, who seconded it? Did you?
I don't know.
I did. Well, I made the motion.
Okay.
I said so moved. Yeah.
I just want to make sure we get it correctly, so, thank you.
Phil, can you outline what we're gonna do as far as hopping on to the next meeting?
There's a separate link for health insurance.
Yes.
Yeah, it's another one.
Time wise, like, so.
Oh, it's real, yeah, it's a 1:30.
Well, we should be able to do it at 1:30.
Okay.
Okay, roll call, trustee Blackwell, trustee Black,
Adjourn.
trustee Blackwell,
Not in the room.
trustee Nelson,
Oh, there he is.
Yes.
trustee Ochoa,
Yes.
trustee Price Ward,
Yes.
trustee Riley,
Yes.
trustee Rodriguez, trustee Vincent, trustee Washington,
Yes.
trustee Weiss.
Yes.
Thank you.
Thank you, and thank you for having a very good meeting. I appreciate everyone participating, so thank you so much. Have a great day.
Yeah, it was really needed. The first two were really needed.
Yeah.
And
Oh, wonderful.
Tammy, good to see you.
Oh, you too. Where are you, Victor? Was that Victor?
It was
Yes.
Yes. Yeah, hope you're feeling well.
Are you coming back for health insurance?
I am.
Who's gonna be here for health insurance? Not everybody, I guess.
Show up and do all the work at school, and we show up and do all the work here too.
Well, wait a minute, what am I?
Well, you were teacher, right?
Oh, you said, oh, I thought you meant active.
I'm saying that
Teacher.
we have a skin in the game. We show up to the meetings. We do the work. We're having a conversation. Like, agree or disagree with whatever.